Yeah. Okay. So top 5% of strategic intelligent hedge fund traders prepared very carefully for the trading day. So let's go straight to the charts with the Alpha Fibonacci system and how JP Morgan traders trading Alpha Fibonacci system. Here we go. These are proprietary levels you can install on any platform you choose and apply proprietary rules. This is historical event. This is the start of the Middle East crisis. Alpha Fibonacci system spelled out. This is a place to monitor for long. So if I show you this chart before the bullish rally, this is the event. Hamas enters Israel on October 7th. In the course we're discussing with students, last week in October, despite world being in shock, we're discussing. This is institutional buy point. Institutional orders sitting and waiting to be filled. Today, 7 months later, S&P is up 1,200 points. Have you been buying the market? Or have you been watching the news and shorting institutional rally? Do you understand the power of this? Do you understand the importance of riding bullish institutional trade? Do you understand that buying started viciously in September 2022 and continued on that day? So here we are this morning. What do we discuss with my incredible traders? We discussed this morning that bullish rally overextended and market stuck in institutional correction. Option traders love this chart. This is massive institutional correction with exhausted buyers. That again, you knew this months in advance. And when you zoom in on retail chart, this is retail chart with proprietary levels and proprietary settings that you can trade on any instrument you choose that show you. This is institutional buy point. This is institutional sell point. Correction remains on. We're dealing with weakness. We're dealing with very slow institutional crawl. So again, absolutely no software on this chart, only proprietary Fibonacci tool, proprietary Fibonacci settings and rules. But if you decide to day trade futures, this is a software projected on 1-minute chart. Trades played out on multiple other charts, all recorded on video and will be posted on our YouTube channel. As price reached critical key target, as price reversed from alpha Fibonacci buy point. So when the scanner giving you multiple alerts, it means the power. You choose the trade and write the power. That confirmed. Profit taking is mild. Institutions keep buying the market with vengeance. That's it. And that's strategic intelligent chess that you can trade on all instruments, all time frames, all platforms, as we will review next on multiple charts. That's what I recognized in 2004. So if you're looking at S&P mini future that's pulling back from critical key alpha Fibonacci brick wall, this is identical event that's playing out on NVIDIA. My goodness, it's exact same level. And alpha Fibonacci system spelled out NVIDIA buy point at 12. Could you buy NVIDIA at 12? Could you look at the chart once a week, once a month? If day trading not for you, trade NVIDIA, trade Apple that's overextended and pulling back from alpha Fibonacci reversal zone, all spelled out weeks and months in advance. But if you decide to trade euro, please tell me, has anyone seen good news in Europe? As I just came back from London and Paris meeting with students, how is it possible euro skyrocketing? My dearest student for life, my dearest friend for life, left Saudi Arabia and bought home in South France when euro at 96 cents. So here's euro in front of you right now. 104 is a lifeline on euro. 118 is a critical key brick wall. 104 is out, euro in free fall again. But again, spectacular bullish rally on euro, despite catastrophic crisis in Europe, is a stunning reminder. Use your limitless brain. Do not gamble with your money. If trading on the news worked, every single person on the planet would be Bill Gates. It never does. But using your limitless intelligent brain and trading strategically works. In the trading room, you're witnessing precision of the system in the live markets. Right now, S&P mini future on every single chart moving to the downside. But again, if I bring to your attention identical level where S&P skyrocketed from and continues skyrocketing from, it's exact same level as on S&P on multiple charts this week, as played out on Tesla. Charts are twins. Only difference, you're looking at the chart once a week if you're trading Tesla. And that's how strategic intelligent trader trades, preparing carefully for each and every trade. So when you're using your limitless brain and stop gambling with your money and trade with institutions at key institutional levels, everything changes completely. You start joining top 5%. You start trading rule-based alpha Fibonacci system, traded in US and globally since 2011 on all instruments, all time frames, all platforms. No software required. As traders trade on interactive brokers, on TradeStation, on MT4, MT5, Infinity, on multiple other platforms. It's absolutely your personal choice what you decide to trade. So since this morning, I worked with a trader in London who is trading crypto, who is legend in the course. Here's Bitcoin selling off. Could you buy Bitcoin at the bottom? Could you prepare and be strategic, intelligent trader? Do you know where to take profits off the table? Do you know what this means? When you do, you trade markets as intelligent, strategic chess. So when you come to the website and you look on students' performance, you see clearly. Here's a statement from Ken. And the reason I live and breathe what I do. You developed holy grail of trading. I've heard this thousands and thousands of times. Why? Because you're trading markets strategically. You don't need any software. Ken is trading crypto. Brad, S&P tried for 20 years before. Every single one of these traders applying identical strategy. Joseph's trading in Moscow stocks. Legend. Spoke in a bootcamp sharing how much he's against the war, but he's trading on platform I never heard of. Richard, oncologist in Chicago, retired trading system on options. Richard was a very big fan of Tesla. When Tesla was in free fall, he preserved his retirement portfolio, applying the system with options. As you saw what played out with Tesla, correct? You remember that sell-off? So when you see stories of traders from all over the world, you start seeing market in identical light. Every single instrument is exactly the same. S&P is showing this to you right now on every single chart. Only difference, if you day trade S&P, it requires ultimate patience and discipline. But if husband bringing his wife to the course and Jennifer trades NASDAQ, as you can see on the website, anyone can. That's it. S&P pulling back and skyrocketing from identical level. as euro, as Tesla, as pound. It's all the same. 20 years of developing my own systems, I promise you. Pure price is simple and pure. When you stop blocking pure price and when you start trading with rules, you're applying identical mindset when you're driving the car. You're staying in your trading range. You're hitting the brakes at the red light. When market is weak, a market stuck in correction. This is what bold pink line identifies weakness. Bullish rally exhausted. Market in institutional correction, and this can last weeks and months. And that's how intelligent traders trade current events. So when you're applying Warren Buffett mentality and you are being fearful when others are greedy and greedy when others are fearful, you remember forever the current global crisis when we are witnessing the biggest rally, second biggest rally in the history of stock market. Wow. Have you been shorting the market or have you been thinking as intelligent, strategic Warren Buffett does? That's it. That's what I teach to my students, to use your limitless brain and apply proprietary levels and tools. S&P 1200 points in profit, stock in massive correction. It's a phenomenal time to prepare for volatile fall and extremely volatile next year. And that's how you trade all markets as intelligent, strategic chess. So in order to become a successful top 5%, start trading as top 5% does. Be done with chasing cheap delayed indicators. Snap out of that comfort zone that's very easy to be stuck in. Stop chasing lucky point. Stop trading all markets as a strategic, intelligent chess. And you can trade across all instruments, as proven by traders all over the world. Brett tried for 20 years before, focusing on trading S&P only. You can listen to this traders podcast as you will understand and see. This is institutional lifetime system for all platforms for future stocks, FX, crypto, ETFs, mutual funds, options. And if you will decide to apply software for NinjaTrader 8 platform, this is how the alert would play out on scanner. Single alert on S&P mini future means weakness, means bullish pullback in a play. When massive number of alerts play out, it means strength. That's it. Do not overcomplicate trading. You want to trade conservatively, you take only second and third alert. But there is no surprise, all precise, a software playing out in front of you right now, reminding you the best things in the market are simple. All the complexity traders create for themselves. And it's not traders' fault, because that's how market design. When you enter in trading world, you're exposed to so many different indicators, to so much noise. It looks so easy to make money. So if you survive the first 2 years in the market, you hit the brakes and wake up and you start understanding pure price is the answer. And when you trade pure price for entry and alpha Fibonacci for exits, the sky's the limit. You can trade any instrument you choose. Simplicity and precision is a reason system traded globally by traders from 14 to 80 plus year old. So when you trade all instruments, all timeframes, all platforms, or with software for NinjaTrader 8, everything changes. Bold red zone, institution short, you short. institutions profit taking is present, multiple led alerts are present, you take second or third alert and you write the power and you know where to exit and you know where to enter. That's it. You do not overcomplicate trading. You deducting your brain and focus preparation for your trade with a predictive institutional system that identifies key institutional points of entries and exits far in advance. So if I bring to your attention again, in case you missed, since we had a glitch with webinar being closed by mistake, here we go. This is what we discussed before, as we already reviewed S&P mini future. This is NVIDIA Alpha Fibonacci buy point, October 2022. Here's NVIDIA right now. NVIDIA pulling back from critical key Alpha Fibonacci level. This is 2 years later. This morning I was teaching institutional class and how to identify these levels and targets. What else do you know many months in advance? If you understand the rules of the system, this level is out, this level to follow. But again, how to trade this? You must know the rules we discuss in class. But do you remember Amazon? Do you remember the catastrophic crash on Amazon 2022? Have you learned your lesson? Do you remember the sell-off? July 2021, Amazon sold off 65% plus and skyrocketed from key Alpha Fibonacci buy point. So day trading is not for you. Trade system long term. You can install these levels on TradeStation, on MT4, on Fidelity. If JP Morgan traders trade this, if students in Saudi Arabia, in Dubai, in London, in New Jersey, in Florida, from 14 to 80 plus year old trade this, anyone can. Look at the charts once a week, once a month, write the power. Identical level on Amazon since that day in April 2024. That's in a play on S&P this week, as we just reviewed now. And that's the power and purity of the system that, again, you can use on any instrument, any time frame, any platform you choose. You make a personal decision. In day trading, technical execution. In day trading, patience and discipline is a must. So when S&P remains stuck in such weakness and you are bored, trade NASDAQ, trade oil, trade gold. So when you come to the website and you click on students' podcasts, whose podcasts are my favorite? Complete beginner traders, or those who are bringing their children to the course, who are trading. So listen to Pablo. I worked with him this morning. He's trading it all. He's trading stocks on TradeStation. He's trading futures, gold, NASDAQ, oil, S&P on Ninja. But when Andy bringing his son to the course, it's an ultimate honor. And that's traders all over the world, where every single trader make a personal decision on the instrument and time frame appropriate for trader to trade. And that's strategic intelligent chess, as S&P confirms weakness. Stock at the bold green zone, there is no multiple alerts, nothing here to do. Only weakness is present. That's it. So when you start understanding the importance of riding multi-billion-dollar machine, everything changes. You no longer trade against institutions, you're trading with them. So if I bring to your attention Apple and the events that played out on Apple, here's Apple at Alpha Fibonacci buy point. This is reversal zone December 2022. Here's Apple now, reached alpha Fibonacci reversal zone, bearish pullback in a play. Again, how to trade this? You must obey the rules. Again, this is a strategy you can trade on any platform, any instrument you choose. If the platform has Fibonacci retracement tool, insert proprietary levels, apply proprietary strategy, and trade the instrument appropriate for you. That's it. And that's strategic intelligent chess with predictive alpha Fibonacci system. CEO, my dearest friend for life, I love when he comes to class 2 o'clock in the morning to share his incredible journey. He comes just because of his kindness and gratefulness. He comes because he's an inspiration to others. He's trading it all. He's trading minute charts on Forex, he's trading MT4, MT5, and he's trading futures on Ninja. Legend. And that's our community of the highest integrity traders, as he states in his very kind words. Your invaluable bootcamp is a great revision into not only what aspects of trading one needs to focus on, but more important, how one needs to balance their psychological as well as their daily intake of nutrients, which is again one of my other degrees where I focus on your well-being, especially in private mentoring, for your ultimate alpha state. And that's the crucial key part of your success. And that's our global community from all over the world. As again, you can listen to Theo's podcast as our podcast channel expanded to more than 58 countries. So if these traders can do it, so can you. So again, what would your trading be like if you traded with institutions or on instruments? What would your trading be like if you removed your reactive behavior and you actually started applying your strategic intelligent brain? You are a limitless human being. You can become top 5%. So please hit the brakes and ask yourself a question. Who is next to you? Are you ready to take the leap into the next stage of your life? Are you ready to trade markets as strategic intelligent chess? If you are, please view movie made by student on our website. And you will see how traders all over the world trading alpha Fibonacci system for the last 13 years. And please review all the information on the website, and you will see that traders all over the world trading the system on all instruments, all time frames, all platforms. So when husband bringing his wife to the course, when father bringing their children, when student making movie about Fibonacci Trading Institute, when student comes to class, it's 2 o'clock in the morning to share his journey and story, it shows you this is global community of traders who proven to the world what's possible if you make an effort with alpha Fibonacci system. The most desirable package, private mentoring, includes savings of $8,000. I meet with you one-on-one, and you have access to all group classes, video library modules included in every option. Students in Africa, students in Middle East, students in Asia, in Japan, in Singapore, in Dubai, view videos 24/7. If you work full-time, you don't have to come to classes. Over 300 videos of prior lab recorded classes. Option 2 is a group course. The most popular option, savings $5,000. If you are not on Ninja Trader 8, option 1 and 3 appropriate for you. If you have any questions for me, please do not hesitate to contact me. Simply click on Contact Us section and send me an email or send me your phone number, and I will absolutely reach out. Or simply pick up the phone and call. But please, first, review all the information on the website and view our students' performance, view our students' podcasts. And if you would like to review instruments in the live markets, please sign up for the invitation to the trading room. Trading room will be open on Monday. Tomorrow I work with my students in private mentoring. Any questions for me? Please do ask. Few more minutes for the final questions.
Hey, Alla.
But if we're out of time, please do not hesitate to join me in the trading room, where you can always ask questions or you can simply email or call me. Thank you so much.
Hey, thank you, Alla. Also, if there's anything else you want to put in the chat that we may have lost, feel free to continue to add that too. I had previously put your, I think, email and phone number in there, and then we lost it. And so if there's any other link or something that you would like to put in there, feel free to do that. And yeah, that's all. I do see you.
Thank you so much.
Yeah, thank you all. We appreciate it.
Thank you. It's been my joy and honor. Thank you so much for having me. Thank you, traders. I live and breathe what I do. I look forward to working with you. You're serious about trading. You came to the right place. Adios, everyone.
Thank you, Alla.
Thank you.
It was a pleasure having you today. As a host, this was my first time, but you've been here before, so thank you, and we appreciate you, and we hope to have you back. And I want to thank you. Yeah, I want to thank you for making such a generous offer to our audience today. Your Alpha Fibonacci system looks incredible. Ladies and gentlemen, if you're looking for a proven system to trade the markets with incredible accuracy, look no further. You could find Alla's special offer in the chat box, and you could find her at Fibonacci or fibinstitute.com. That's fibinstitute.com. FIBINSTITUTE.com. Alla, thank you again for joining us today and giving us a proven system to trade the markets. We really appreciate it. And God bless you in Ukraine. We are all praying for peace in Ukraine as well. So thanks. We really appreciate it. What an incredible story as well.
Thank you so much. It's been my joy and honor. Thank you so much.
Thank you.
Bye-bye.
Ladies and gentlemen, that brings us to our next presenter, who shares a different way of investing that allows you to hold assets rising in value and profit during bear markets. He believes that investing should be about capital preservation first and growth second. With over 25 years of investment experience and data, working with 20,000 self-directed traders, that's a lot, he is confident that anyone who wants to make money in all market conditions and with less risk will naturally gravitate to this exciting yet logical method. Ladies and gentlemen, here to present The Retirement Reset is Coming, a reality check for traders, is Mr. Chris Vermeulen, founder of the technicaltraders.com. Chris, thank you for being here today, and welcome to Traders Corner. I think you're on mute.
Thanks for having me. Yeah, pleasure. I was on mute.
Thank you, man. We appreciate it.
All right. Well, I'll jump right into it here. I'm going to go through a lot of charts, some live charts, kind of walk you through this financial reset that I think is coming. And the reason I really want to try and show people and share what I see and what the charts and the economic data is showing is because if you are close to retirement, it doesn't matter who you are, it doesn't matter your age, but if you are close to retirement or retired, it's more important for you to understand this so that you can at least figure out a way to take action or follow what I'm doing. I'm going to show you today. So long story short, let me just get through the disclaimer, get this out of the way. So access to this webinar is for educational and informational purposes only. We provide educational services that are meant to teach you the risks and reward of trading and are not implying or guaranteeing any profits. Past results are not necessarily indicative of future performance. Trading securities and options involves risks, so do not risk money that you cannot afford to lose. And consult a licensed broker or financial advisor before placing any trade to ensure it's suitable for your personal circumstances. All right, so let me give you a really quick high-level rundown of who I am. I'm born and raised in Canada. I'm married, 2 kids, which my daughter just graduated from elementary school last night, so it was her big graduation. She's now a teenager going into high school next year, which I cannot believe how fast time flies. I'm an entrepreneur. I have multiple businesses in all different fields. I love to invent and build stuff. I'm also a technical analyst. I've been trading the market since 1997. I've done everything from fundamental analysis, technical analysis, futures, options, day trading, you name it. I've done it all. I've been through the gauntlet. I know what works for me, what fits my lifestyle, how active I want to be. And right now, my main focus is managing my own money, and what I do is what I share with you guys if you end up wanting some of what I offer. More or less, my strategy is for somebody who has some decent wealth, 100,000 or more, or millions, and they want to manage it and grow it in the most easy way, the least amount of trades, but make the highest return possible, which is about 2 to 3 times that of the buy and hold strategy, but with a fraction of the risk. We make money in rising and falling markets. Our biggest drawdown, as you're going to see here, is less than 6%, where the stock market or the buy and hold is about 40 to 60%. And that is what I want to show you, is how to grow a large amount your retirement fund in a way that is very risk adverse and allows you to mature or generate lots of returns to go out and do the things you want to do, travel and hike and bike and all that stuff. I'm also the author of 2 books, Asset Revesting, which is the strategy I'm going to share today, and also Technical Trading Mastery, which this strategy is built on technical analysis. No fundamentals, no news, could care less about that. All we want to do is identify a trend moving, make sure it has enough strength behind it, and then we play those and manage positions accordingly. We don't care if the market goes up or down or what the Fed does. I've got my family here is my daughter Maribel, Leo, my wife Kristen, Ben, and we like to travel. We like to do all this fun stuff. I was fortunate enough that I semi-retired when I was 27, did very well from the financial markets, and built my dream house on the water, which you can see me sitting here. We've got a pool, cabana, boats, dock, all that stuff. And the strategy I'm going to show you is something that allows you to make a lot of money in a shorter period of time. If you apply the buy and hold strategy, you have to put in your 40+ years of investing. You'll never see a buy and hold investor retire in their 20s. If you're an active trader trading all the time, the odds are a year or 2 years from now, you haven't made any money or you've lost money and you're done. It's a rotating door. It's a proven fact that like 97% of active traders never stick through it. They can't survive. And so I'm going to show you a strategy that is kind of in between. It's just active enough to move our money, so we're always holding, our money's always in an asset that's going up. Sounds crazy, but it's actually very possible, and it's very simple because we use ETFs. We have one position open at a time. So let's kind of jump into some of the nitty gritty. I want to talk about managing risk and positions. That's our kind of our core. If you don't do this, you're not going to make money. Unfortunately, this is like the most boring stuff. Nobody ever wants to focus on how much do they put into a trade and how are they going to manage their risk and all that. And we're going to go through market structures and stuff. So let me jump to the charts. Actually, I'm going to jump right into this infographic that I have, that if you do go to my website down the road and you opt into our list, you'll get this infographic for free. There's a whole whack of great stuff we might touch on today if there's time. But everybody needs to understand market structure. Market structure, there are 4 stages to the stock market. Stan Weinstein, I took this out of his book. I learned this many years ago. You need to understand that every asset, and it doesn't matter the time frame, could be a 1-minute chart, could be the quarterly chart. Every chart goes through these 4 stages. You need to be able to identify the stage. Every stage requires a different strategy, and you need to know how to manage and trade those. So more or less, the green sections on this chart are a stage 2 and a stage 4. That is a bull market and a bear market, a financial crisis. And that is because we make a lot of money with big trends, and whether they're up or down, and typically topping stages, which we've been in with small cap stocks since 2021, is very difficult. Markets and sectors are all over the place. It's best to just stick with the indexes, not individual stocks. And during a stage one sideways phase, it's the same, choppy, difficult. Sectors are hot one week and out of favor the next. So this is the structure we all need to know. Now, there's the general market participant emotions that people go through as we go through these. And like, you know, back in 2021, just before the stock market peaked, everybody was like in this euphoric and thrill phase. We saw this with Bitcoin before it topped, you know, many years ago, back at like 60,000. It's getting into this AI, NVIDIA kind of bubble as well. Everybody's piling into it. We just had the largest record inflow into technology funds last week. And that is a sign that, okay, everybody's now piling in. And NVIDIA is doing all the things to shoot their share price higher, like their 10-for-1 stock split. Now, small traders can now go and buy a share or a couple of shares instead of saying I don't have enough for one share, or I don't want to buy just one. I want to buy at least like 5 or 4. Anyway, people go through this euphoric phase. We all love a bull market, and it's amazing, but we need to understand when we get into this other phase. And right now, I believe we are in this complacency move in the general stock market. People think the market is going to keep going higher, the general people. And the reality is everything is breaking down behind the scenes. It's completely masked right now. It's camouflaged by AI, by technology. The SP 500 and NASDAQ are hitting new highs, and that is one sector doing all the heavy lifting, dragging it up. Meanwhile, small cap stocks, equal weighted stock index shows that the markets are struggling. Major double top, big bearish patterns, not a very healthy sign. And what is cool, what I'm going to show you is we can live this exciting phase to the upside where everybody's feeling great and making money and wealthier than they've ever been. We can live that on the downside. Now, most people, when the market rolls over, probably later this year, they're going to go into anxiety. They're not going to believe we're going into another bear market. They'll be like, we just had one in 2022. How are we having another one? I'm expecting, 10 years of gains. Eventually it'll fall enough that they have denial. They can't believe how much they've lost and they don't know what to do. And then eventually they hit a panic state and they all have to get out of their positions. They can't afford to lose anymore. Their retirement will be toast and they're running out of money. And that's when the market puts in a bottom. And as most people are doing this, we are going through, instead of anxiety, we are in the belief stage. And so we're getting excited. We're like, the market's breaking down. Like, I believe we're going into a stage 4. And as people are denying it, we're going to be going, this is amazing. Markets are falling. Our accounts are going up by leaps and bounds. As people are panicking out, we are in a euphoric phase going, this is awesome. This is like taking candy from a baby, but we do know it's coming to an end. We're not euphoric. We're excited, but we also know we got to manage positions because there's going to be a bottom here soon. And so we get to live this exciting curve twice. Unfortunately, it's at the expense of the markets and other people losing their shirts. We are in this top kind of maximum risk. Anybody who puts money into the markets, doesn't matter if it's real estate or what, it's all at high risk. You're putting in money with very little upside potential. It'll take a long time for the cycle to cleanse itself and then start making higher highs. So we definitely don't want to be doing that. When we go and take a look at, let's go back over here and flip forward to the kind of technical analysis side of things. So the key here we always want to look at is what the market is doing from a technical standpoint. We want to identify these trends. Now, this is my strategy. It's simple, it's red and green. More or less, when the market is red, we are in a different asset class. This is the SP 500. So we will be long either bonds or the US dollar index or BIL, which is a cash, pays out daily interest, monthly dividend payments while the market's reset. And so we want to make sure we play this market to the upside, and we don't want to hold things falling, going down. And when the market is in a downtrend, just like we saw in 2022, there's very short-lived little trends to the upside, and the market generally is in a downtrend. And this is when the market turns red, we want to move to a different asset. And this is where a lot of people get confused. People say, oh, I own a whole bunch of stocks. I got sector ETFs. I got all kinds of other ETFs. I'm diversified. I got bonds. I'm good. The reality is, it doesn't matter how many stocks you own. if you own stocks, that's one asset class. When the stock market goes down, pretty much all stocks go down. So when the stock market is red here going down, you should liquidate all your stocks and move to a different ETF that goes up. And in this time here where the SP 500 or the QQQ went down about 25+%, the UUP, US dollar ETF, rallied significantly in that same time frame. In fact, if we take a look at UUP here on the chart and look at it from 2022, you can see in 2022, it just ripped to the upside, and it did so on very little volatility. The biggest pullback was about 4%, which is nothing. It's not very stressful. So the stock market fell, and we could move into an ETF that moves very slow, but keeps going the opposite direction. So that is kind of the key to identifying these markets and knowing, hey, if one asset's going down, let's move to a different one. Now, to kind of go back and look at some of these other aspects of the markets, what's interesting here is if we look at the stock market cycles, typically this blue cycle here is the stock market cycle, the yellow is the economic cycle. Generally near the top of a stock market cycle, we're going to see gold and precious metals start to firm up and do well. Gold is hitting and testing new all-time highs. We also see energy. Energy stocks are testing at new all-time highs, and industrial capital goods have been on fire, and they're primed and ready for a big run higher as well. All three of these are telling us that they're maturing and they do well while the stock market is starting to top. And a really good visual of this is if we actually show you on the charts right here, if we were to look at the current chart, and let's go back to 2008, and you can see how we get this divergence. So we have the stock market on top, the SP 500 started to sell down, and if we look at this bottom chart, this is the gold, energy stocks, and industrial sector ETFs. So as the stock market sold down, it sold down roughly about 9% or so. At that same time frame, the defensive sectors rallied about 14%. So that is like a 23% difference. And when we get this type of divergence where the stock market starts to flounder, yet these defensive late bull market cycle assets come to life, that is a big warning sign, because eventually when the stock market does break down, this is the breakdown here into a stage 4. When it breaks into a stage 4, almost everything goes down, even gold, energy, like everything starts to go down, and we don't want to hold them. This is just a warning sign telling us what's going on. We're not quite there just yet. I think we're going to see the stock market continue to potentially grind a little bit higher for another couple of months. But overall, gold, energy, and industrials have a very strong bull flag pattern. They're ready to continue to go higher. And when we start to see this divergence, we know we are like just months away from a major market top, and we want to be aware of that. So that's kind of an interesting angle that this chart here is telling us from a stock market cycle type of analysis. So the technicals are showing that. The cool part is when we look at the economic data, we can go back here and we can see this is the amount of government jobs as a percentage of total job openings. Now, when the government starts opening tons of jobs and we start to see them flood the market with jobs, the government loves to cover things up. As we know, it's like everybody's conspiracy theories and all this other stuff, and they never want you to know the truth of real inflation and all that stuff. But looking beyond that, they're always trying to make everybody feel good. And so lots of jobs start opening up from the government. We start to see this rise, and then it usually leads into a bear market, some financial crisis, the tech bubble, financial crisis, COVID, which was very short-lived, but we're starting to see their jobs open up. They're flooding the market with all kinds of jobs trying to support things. The crazy part is, even though they're putting in tons of jobs and hiring, we see the 2-year moving average of unemployment. It just crossed through the 2-year moving average. And every time we do this, we go into a financial crisis, COVID, the 2008 tech bubble, and all the ones way before my time. But overall here, We're already seeing unemployment go up, even though they're flooding the market with the government with jobs trying to more or less support things. So this is a huge red flag that we are very close to a financial reset. And then to take things further, if we look at full-time jobs, so not just jobs getting cut back and trimming and people getting pushed onto contract, out of employment, full-time jobs, people just like literally just getting let go, we have kicked down into this red zone, which is not a good sign. Like people are just getting laid off permanently. And that usually precedes stock market correction. And of course, the economy then follows several months later. And because people are starting to lose their jobs and getting fewer hours working, we have gone from this cumulative excess savings from, this is US data, of savings from investors and people to we have now crossed down and now people have burnt through their savings and now we're back where we were pre-COVID. So the signs are there. There was a thing I listened to this morning, a bunch of entrepreneurs with companies did a poll and they said 95% of them said it is way harder to close a sale right now. People just don't want to buy services. They're tightening up. And that's because people are going broke. People have burnt through, they're not buying toys anymore and all that stuff. So that's kind of where we stand when we go back and look at this economic cycle. The stock market is near a top. And while the economy hasn't fully changed gears yet, the signs are there that the top is getting closer from really things shifting and kicking into a recession. And things will get very ugly at that stage. Let's take a look here at one of the biggest problems that us as traders and investors have are our emotions. We did a survey last year with about 5,500 people. And almost everyone said had the exact same problem. They all say FOMO or emotions get in their way, and that is a huge problem. It gets us into bad positions. And generally, if you don't know what the markets are doing, you don't know, you're scared they're going to always fall. You're going to be trading on pure fear, and that's never a good thing. So we can get around this by knowing the technicals I just showed you of where we are in the big picture, and like that was the 34,000 foot view of the markets and the economy. We know the end is coming, but now we also want to make sure we understand our personality type so that we don't hurt ourselves when we start to manage positions going forward as maybe you're an active trader or just a fairly passive investor. You want to make sure you're not emotional. Now, I don't know how many people here know what their personality type is. Now, I'm talking Myers-Briggs personality test. There's some pretty interesting analysis. Now, there's 16 personalities with this test, and each of them, there's 4 letters. And for example, my initials are an INTJ. I'm considered like an architect or a scientist. I'm introverted, intuitive, thinking and judging. I love data. I love stats. Things have to be logical for it to make sense to me. Kind of prove it and put the odds in my favor. So the stock market falls right in my sweet spot. Now, what is interesting is I ended up reading a report, this was several years ago now, from the Employee Benefit Research Institute. They talked about how they did a survey and their stats show 81% of individuals are going to run out of money in retirement. And that is not going to be a fun scenario. And out of curiosity, I had written an article on what is your personality type as an investor or for investing. And I had ran the numbers and did my analysis, and it shows that 13 out of 16 personality types do not bode well for people to manage their own money. And 13 out of 16 happens to also be 81%. So it fell in line with this other research from another company, which helps kind of really solidify the idea that most people do struggle because they have a personality type that requires assistance. It doesn't mean it's bad. You're bad to have a personality type that's not good for financial trading. But more or less, if you do this test, which it's 16personalities.com, if you were to go there and do this test, if your personality initials have an S or an F, or potentially both, then you are definitely going to struggle as a trader. That means you're sensing. So you're doing things just on senses. It's still a gut kind of feeling. And the other one is an F. It is your feelings. And so if you are a touchy-feely, emotional person, your personality type is, you are going to be susceptible to FOMO, to fear of missing out, to fear of, you're going to be driven by emotions. So Go to that test if you want, 16personalities.com, figure out your emotions. If you're an S or an F or both, then you definitely need somebody to help you. And that's kind of what I offer. I kind of really do everything up to having these trades executed for you in your account. You don't have to learn or do anything if you don't want to. So that's kind of very important phase in the markets to be successful. So there's a few other things that really are, I call silent killers, that a lot of people don't know of, and that leads into, you know, false beliefs of diversification. People think you need to diversify. Everybody's into the 60-40 split, or they buy these fancy ETFs that are like an all-in-one that have expiry dates, and they're hedged with covered calls. I mean, I have gone through many of them. They're all terrible. They underperform the markets. The hedged ETFs, if you hedge anything, it means it costs you lots of money. You're spending money to lose, but to lose a little bit less. You miss all the upside when the market rips higher. So there's all kinds of things going on. But I want to show you one of the most painful silent killers here that most people don't fully understand, and it's just drawdowns. And I didn't realize how many people don't know what a drawdown is. There's actually two types of drawdowns. The first one most people know of is simply the value. How much did your account value draw down or drop in value? What's the biggest drawdown your account or your strategy has ever had? And you know, the market pulled back 24%. This thin blue line is the buy and hold strategy on the bottom. Here we are now. We're like, you know, a couple of years later, and the market's finally just hit some new all-time highs. But if you hold a bunch of stocks in your portfolio, individual stocks, you're probably struggling to make all-time highs. Probably actually well below that, because you probably hold bonds too, which are, you know, beat up, down 40%. But you're wasting years. And this is, I mean, we can all make money back. That's actually not a problem. What we can't make back is time. To miss 2 years of 5, 7, 10, 15% return is pretty darn costly, and it can really change people's outcomes. So the strategy I'm going to show you is how we can consistently make money almost every single year, month after month. And it doesn't matter if the markets are going up or down, because we just rotate our money from one asset class, stocks or bonds, to another as we need to. We're not married to any particular investment. We look at it like a rental property. We move in, or an all-inclusive. We go there for a couple of weeks to have some fun, make some money, and then boom, we're done. We move on to somewhere else. That's kind of how I like to look at it. The other here is sequence of returns risk. This was something people have no idea what it is. Once you hit retirement, this is when it really kills you. And the problem is nobody knows about it till it's too late. Unfortunately, I'll touch on it really quick here because we don't have a whole lot of time. But long story short is, this guy here, Mike, $1 million, they both have $1 million accounts. He's aggressive. And then there's John, a consistent or conservative trader. This guy swings for the fences, and he averages 8% a year. And he ends up, after 10 years of withdrawing 50 grand to subsidize his living, he ends up with 800K left out of his million. So he's doing okay. He's slowly eating away at his account. John, he only makes 6% less, a whole lot less than Mike, but he ends up making a lot more. In fact, $370,000 more, which is 45% more than Mike 10 years later. That is a huge difference. And most of us are going to be retired for a long time. So the reason this happens is it's not about how much you make every year, it's how much you don't lose and give back. The problem is you lose 14% of your account, and then you withdraw $50,000. And so now when you make your gains the following year, you're only making the gains on $950,000. So you're not making it on your full amount. And so every time you have a losing year and you withdraw money, you're digging a hole deeper and deeper and deeper. But if you focus on not taking any big losses and you just slowly grind your way up, you don't need to make big gains because you don't have any big losses, and it compounds even faster. And so for an example, here's the buy and hold strategy up to 2022. This is the buy and hold 60-40. You average about 5.78%. After 10 years of withdrawing money, you still have your $1 million. Not bad, sounds okay. But if you use the strategy that I'm showing you, this multi-asset revesting strategy, you do the exact same thing, except for you focus on only holding assets going up or sitting on the sidelines until something is going up. And you make almost 3 times the amount of return, and your account is now over $3 million, and you had withdrawn 500 grand over those past 10 years. So this is huge. If you are, have a volatile account and you're retired and you're pulling money out, unfortunately, this is something that most people don't learn until it's too late. And there's no coming back. When it's too late, you don't have time, you're not making any more money, the damage is permanently done. Let's take a look. So the strategy that I use is called asset revesting, and I focus on a hierarchy of ETFs. So I focus on the SPY and the QQQ, TLT, which is bonds, US dollar index, the inverse US dollar index, and bill, which is like sitting in cash, but you earn monthly interest and dividend payments. There's no really downside to it. You just continue to collect. Now, they all have a correlation that's not related to each other, to the SP 500. So with the SP, if we're not long the SP 500, which we always want to be because it's the most volatile, it has the most potential. But if it's not favorable, then we look down the list and go, okay, do we get into bonds, which they have not been favorable for a while since COVID crash. And we've been trading the US dollar and bill. So if the dollar, if stocks are falling, we've been moving to the dollar or bill to watch our account continue to grow slowly while the market resets and gives us a new opportunity. If we take a look at how that looks on a chart, this is the COVID crash, the SPY, TLT, and BIL. Stock market started to roll over. The market pulled back about 3%. We got a sell signal with our strategy because we follow cycles and trends and intermarket analysis where we could see the money flow had shifted and there was a flood of money exiting the market. Our strategy says, hey, get out. We moved into TLT. It rallied 19% in 9 days, which was total miracle or dream. It was pretty amazing. We had a 15% target. It actually gapped above our 15%, filled us at the high at the open, closed our position out, and then it crumbled. And as we closed it out, we moved into bill and we collected interest while the world was falling apart during the whole pandemic. It was pretty wild. And then we were eventually able to move into the stock index at a 13% discount and ride it up for another huge gain. So while most people lost their shirts and was panic about their money, our account just skyrocketed up, and it was in a very controlled way. Like, we got out of the markets before really we knew what COVID was. Just our system could see that there was mass exodus behind the scenes, and we moved into bonds. Bonds were doing what they always do. They move up when people get nervous and when the stock market goes down in a falling interest rate environment. So that is kind of what I do in a nutshell. And if we were to take a look at what this strategy does, and I should mention this strategy has about 5 to 12 trades a year. It is fairly slow. It's for somebody who doesn't trade their own money, they're with an advisor. This may sound a little active, but if you're an active trader, you'll be like, this has no trades. I don't want something like that. And there's always money in the sweet spot and in doing things that no one else does. And that's why this works. This is for people who understand the value of protecting your capital, which you can see here with our max drawdown. Max drawdown is less than 6% versus the NASDAQ and the SP 500 and the buy and hold. That's a lot of downside risk. And we're about to walk into that with a stage 4 decline. So prepare if you were with the buy and hold, and if you don't have strategies to change with these stages, you're most likely going to be in for a pretty rude awakening, and it's going to hurt big time. But our account just continues. I call it the CGS strategy, the CGS investor, because it stands for the consistent growth strategy. We just move into whichever asset and we just inch our way up, and we're still outperforming the NASDAQ from the 2008 market top, which most people would kill to outperform the NASDAQ. So that is the power, and this doesn't include the dividend payments that come out. We earn dividends on when we're holding stock ETFs and things like that. So it's pretty powerful. This year we're up, this isn't updated, but we're up over 10% on the year, and we're sitting long the markets. We're riding this up, and the markets look like they still want to go higher. So it's pretty exciting stuff when we look at it. If this is kind of something that you're interested in, I can kind of show you a little bit more. Oh yeah, you know what? Let's touch on the real estate market really quick, because we probably all have real estate of some sort, whether it's hopefully you've got rental properties. But the real estate market has kind of fallen off a cliff. This is single family home construction starts. I don't have the multifamily one on me today in this presentation, but it's actually better indicator of what's going on. But more or less, we've seen the housing market pull back, and it's had a strong bounce because there's a lot of people getting back into building homes thinking the housing market is about to take off, but the damage has been done. When we look at multifamily homes, which is where there's only really money to be made left in multifamily because they're economy of scale. You have one piece of property, you can fit a bunch of rental properties or buildings on it with shared walls and shared roofs and all that stuff. It makes it affordable. We are about to see the real estate market fall off a cliff. The multifamily housing starts spiked last year, just like it did before the last housing bubble burst. And that's because investors know that's the only spot they can actually make some money. And so that's the last hurrah in starts. And so that is coming to an end. And if we take a look at the, let's take a look at the real estate REIT ETF here. If we take a look at real estate, and let's just, we'll just zoom way back here. We'll get to the 2008. We are in a very similar situation. So back in 2007, 2008, we saw a big run up in real estate, kind of put in a top here. And then it had a big breakdown, and then it consolidated for about a year and a half. And it had this initial move down. This is a bear flag pattern. If you're a technical trader, it points to lower pricing. And of course, then we saw real estate from here fall 65%, this particular ETF. Well, if you look at what we've had here, we've had the run up, we've put in a top, we've now seen it sell off, and now it is consolidating just like before. The Fed and the government's trying to do everything in their will to try and make people think good things, but eventually we're going to see real estate completely reset. And most people don't see this. They don't understand what's going on. And this is the real scenario. This is an opportunity for all of us. I cannot wait to get real estate. I focus on multifamily, minimum 2 units, triplexes, quads, whatever, and up. That's where you can make the most stable, great passive income. And you want to buy solid quality properties that are going to last you 10, 15, 20 years. So you've got that cash flow for forever. Plus your property will continue to go up. But you want to buy it down here when it's fairly valued, when you can get it and you know it's going to go up in value for potentially 5, 10, 15, 20 years. And you're paying rent and your rents go up and you end up making very high annual returns on your investment. So this is something people need to be aware of going forward. All right, last but not least, I think we're getting closer to the end of this presentation. I kind of want to try and keep it on track here. Let's just touch on kind of what we've covered here. So I've shared with you a different way to invest. If that is something you're interested in, you should potentially get my book, Asset Revesting, or go to my website. And you could, if you go to my website, if you just go to the page, you should get a pop-up. You can enter your email address, hop on my free newsletter. You'll get the infographics I've been sharing with you. This one here specifically that shows how the stock market and the economy move, how business owners and how they manage their warehouses and where they see they're excited and they have global expansion. This is the phase that we're in with businesses. This is why industrials are doing well. All these companies think they have a strong company. They've had great sales the last few years, COVID bubble completely making them feel like they're superheroes. They're all upgrading their assembly lines, their equipment. They've spent all this money on new industrial stuff, thinking they're going to continue to grow, but they don't realize we're at the end of a cycle. And industrials have had great earnings because all these warehouse managers think they're heroes and they're spending millions and upgrading stuff. But unfortunately, it's going to be a bloodbath. Most of these companies upgrading right now are going to be wishing they had their old assembly line that was already paid for because sales are going to slow. They're not going to need as many things to produce, and they don't want to carry this huge debt of these multi-million-dollar assembly lines and equipment that they're spending money on at high interest rates. So this is just the painful cycle. And this is the infographic you'll get. I also share the different stages and which strategies work during the different stages. I have some strategies that automatically change, like the CGS strategy I just talked about here. It works through all market conditions. We can consistently pull money out. We also have options, which we write and sell options, and we can make money in all those conditions as well. So this infographic is pretty powerful. And of course, you can also go to my website, The Technical Traders, or my YouTube channel, which is The Technical Traders at YouTube as well, where I share analysis just like we're doing here. So like right now really is kind of the ultimate time to protect it. And I want to share with you a couple of ways that you can take advantage of this. Obviously, you could go to Amazon, you can pick up my book and learn in more detail what I just showed you, how we bring in all the stages and all these things into our strategy. But right now I am offering this package deal that you'll get my CGS, my asset revesting strategy signals, and my weekly reports delivered to you for a very sharp discount. I'm throwing in all kinds of bonuses here. But long story short, you get a Monday, generally a Monday and Wednesday report, video report, keeps you up to loop in the loop with the markets. You get my strategies. We figure out what's going on with bull and bear markets, which is very important. In fact, you actually get this strategy here that tells us when we are in a bullish market. This is our TTI, our technical investor. It comes in the package. We know when we're in a bullish environment, a rising tide. We know we're in a bearish environment when we need to change up strategies more. We know we're back into a rising tide. In fact, I offer just TTI. If you were to go to our website, it's only, I think it's $250, and you'll know when we're in a bull and bear market, and you can really navigate and save yourself a lot of time and money and stress just knowing these signals. We're up something like 30% on this last trade, 34%, for just getting into the SPY when we had a new bull market cycle. Put in a triple leveraged ETF, you could be up like 90%. So there's all kinds of ways you can get my help for free on my blog, my newsletter, buy my book. You can sign up for this bull and bear market. You can go for CGS and have all the trades with you. If we were to look at all the trades, whoops, let me just pull that back. If we look at get this to go full screen. You can see down below is a CGS strategy. So we have trades in and out as we have a bull market and a bear market moving. Generally in a bull market phase, we have nice longer extended trades where we can pull lots of money out, grow our accounts. During a small pullback, small bear market, it's not a stage 4, it's just a market correction. We trade, we still catch these little upward moves in the market. They're still profitable, but we also move to the dollar index. When the stock market moves down, the dollar goes up. And then of course we move into this one, and that's the nice thing about constantly holding assets going higher is we're just constantly watching our account ratchet higher, as you saw in that performance chart. And of course we're back into a bullish phase, so we have longer trends. Our accounts keep pushing to new all-time highs because of how we navigate and rotate through this market. All of the signals we have here are end of day. Again, there's 5 to 12 trades a year. End of day means we get confirmation at the end of the trading day, and then we'll send out an alert in the evening saying, hey, tomorrow at the opening bell, for example, buy 50% of your portfolio in SPY and buy 50% of your portfolio in QQQ. And then once we all enter that the next day, and again, I trade these with my own money. This strategy is for my money, and I'm sharing it with everyone else so we can all do this together. Once we get into those trades, we send out an update after that saying, here's our entry price. Now put in your protective stop at this price, and here's our first target to sell and scale out half of our positions once hit. And then we just update as we go. So that makes it really easy. If you're busy, it can be, you can follow it even if you work a 9 to 5, Monday to Friday job, because you get everything in the evening. On the flip side, if you don't want to learn anything at all, or you just want a chunk of your investment capital working for you, I offer auto trading of this strategy for free. So you can have, the broker will automatically execute it in your account. I don't charge anything for it because I believe this is the way everyone should do it. And then you don't miss a trade, you don't screw up a trade, you don't alter stuff, because that's usually where mistakes start to happen. And that is the other alternative. Either do the trades yourself or just have it done for you at no extra cost. If you want to learn technical analysis, 7 hours of course that we have in there with all the different indicators we use and Fibonacci and all that stuff. As you know, Fibonacci, it's actually one of my favorite tools. in terms of identifying targets and pullbacks. Of course, we use that. It's explained in here how we use it, very detailed. I think we have 2 videos on it because it's very powerful. And of course, we got live monthly mentoring sessions twice a month. You come on, we all talk together, ask questions, we run through the charts. And then you also get Band Trader Pro thrown in, which is our hot sectors and which sectors to trade. If we look at the hot list, we can take a look. For example, this is our hot list here. Let's just the way the hot list works is it gives us these boxes. This green box was the last trigger we had for semiconductors. This is the last buy trigger that was generated, and of course it's had a huge move to the upside. So it resets as we go. We provide trade alerts based around these different assets. We are recently in SILJ. We got out of that a little while ago. We got out of it, I think, right on this day. It actually opened higher and actually hit our level that we wanted, and we closed it out, and now it's pulling back and consolidating. But you get access to all these trades, which is very powerful, and that is kind of where you can go. I think Anthony put it in the chat, thetechnicaltraders.com/exclusive. Hopefully that gives you guys some insight of the markets. It's really important to know that things are, I think, going to get very ugly sooner than later. And you definitely need to be protected. Understanding that this happens is half the battle, so you don't panic. When things get ugly, it's nice to know that that's the norm. That's what happens, and versus being pure running on fear and panic. So that is it, everyone. I don't know, Anthony, if you're good, I can pull the plug, or I can take questions if we've got questions from anybody.
Yeah, if you see any questions, feel free to answer them now. On time. Yeah, we still have 4 minutes.
All right, I don't know where I go to see these questions.
Oh, I'll find them. It's that question box there.
Oh, okay.
If you don't see, yeah, if you see it, good. If you don't, I could tell you what they are.
Let's see if I can expand.
I don't see it. You know what? I'm not seeing any questions.
Okay. All right. Well, yeah. So hopefully everybody got a little bit of insight out of there. Make sure you go to my website or my YouTube channel and download this PDF on the markets by just opting into our free email list. You'll get an email that has this. Understanding these and going through them is really important to know where we're at. And I cover these quite frequently. And yeah, it's all about trying to protect your capital and generating higher returns with a lot less trading and a lot less risk. And yeah, that's it.
All right. Thank you, Chris. Great information. Ladies and gentlemen, if you are over 50 plus years of age, you don't have time for wild movements in the stock market, or that it could delay or destroy your retirement. No one wants to run out of money, and we all want to live the lifestyle we envision and be able to retire comfortably. Mr. Chris Vermeulen has a solution for you, and he's got other solutions as well. It's called the Consistent Growth Strategy, and I can assure you Chris does not hold on to losers. You can learn more by clicking on the link in the chat box or going to www.thetechnicaltraders.com. That's www.thetechnicaltraders.com. Is that trader? Yeah, it's traders, not trader.
Yeah.
Yeah. Okay. Just want to make sure you got that right. And how do you say your last name? I apologize.
Yeah, no problem. Vermeulen, Chris Vermeulen.
Vermeulen. Okay, yeah, that's what I thought. I wasn't sure. So thanks again, Chris, for joining us on Traders Corner, and please come back and see us again.
All right, sounds great, everybody. Take care, and thanks, Anthony. Bye-bye.
Thank you, Chris. Appreciate it. All right, ladies and gentlemen, I just want to pause and say thank you for joining us on Traders Corner. We have over 1,000 investors joining us today from all over the world. We really appreciate your participating in the event, and let's keep the ball rolling with our next guest here. And she has a BA in mathematics from the University of California, a second USC graduate, and an MS in information resource management from the Air Force Institute of Technology, and has over 23 years of experience studying the markets. She is the vice president and senior technical analyst at DecisionPoint.com. Along with her father, Carl Swenlin, she launched the Decision Point daily blog in 2009 with her father, Carl, and she is also an active member of the CMT Association. Ladies and gentlemen, here to present timing your entries and exits like a pro is Erin Swenlin of DecisionPoint.com. Welcome back to Traders Corner, Erin.
Thank you so much. I'm sorry I missed my last presentation, so I'm excited to share it with you today. I'm going to talk to you about setting your stock entries and exits, as the title implies. We're going to talk a little bit about the charts. Well, let's just get going. Let's just start. Make sure I can get this to move. There we go. We already talked about me, so I don't need to go through much of this. But yes, I work for decisionpoint.com. I'm the vice president there, and we have 2 stock reports that we do. I'll talk to you a little bit more about those. I'm also a senior technical analyst. I consult for stockcharts.com, and you can find me now and then on Stock Charts TV. I am the host of the Decision Point Trading Room, and that can be found on our YouTube channel, as well as you can sign up to attend live, and I will show you how to do that shortly. All right, so let's start off with the life cycle of a decision point trade. So we're going to go through kind of the steps that we go through when we trade, and I will we'll be focusing in particularly on setting those entries and exits. But first of all, before you even start doing anything, is you need to understand the trend and condition of the market. That's what I start with, is the big picture analysis. This is something that we do in our decision point alert report every market day. We give you complete analysis of what's going on in the market. We also talk about Bitcoin, gold, the dollar, crude oil, yields, bonds, all of that's included in our decision point alert. And that is going to give you that big picture that you need to know before you get into the market. I mean, if you're running in a bear market trend, it's going to be extremely difficult for you to find longs. If we are in a rising trend in the market like we are right now, we need to find those places where we're seeing strength in sectors and industry groups. We want to be involved in the market at that point. So after I do my big picture analysis, then I go in and I look at my sectors and industry groups, and I determine where I'm finding the strength and dive down into the industry group within the sector, and that gives me an idea of where I want to go as far as my investing. I run scans. I call them my diamond scans. We have the report, the Decision Point Diamonds, and that gives you 10 stock and ETF picks per week. And they come from my exclusive diamond scans. So I run these scans. I know where I want to go in the market based on sector and industry group. And then I do the scans and see if I get some of those stocks to appear for me. I then go ahead and sift those scan results using various technical indicators. I am particularly interested in my PMO, which I'll talk about in a little bit. And I'm very interested in chart patterns. That's something I really like to look at. And I am able to do that when I sift through my scans. Then once I've done that, now it's time to make my pick. Which stock do I want? I've found the stock I want. Now I need to time my entry and my exit. This is what we'll be talking about today, is this part of the whole picture here. Once I've timed my entry and my exit, it's time to determine a target and a stop. I can talk to you a little bit about that, but again, what I really want to concentrate on today is timing your entries and your exits. So which charts do you follow? Okay, well, let's look at it in terms of your investment horizon. If you're looking at long-term investments, you want to concentrate on those monthly charts and weekly charts, and then move on into the daily charts to give you an idea of what the current trend is for that particular stock. Intermediate term investing, you're going to be looking at those weekly charts and moving on down to the daily charts. I tend to go the other way around. I tend to look at the daily charts and move to a weekly chart, but that's more for my short-term trading, which we'll talk about more today. I use daily charts to minute charts on my short-term trading. Day trading, I mean, now your time horizon is extremely short, so then you're going to be looking at minute charts. A lot of people ask me, so what is long term, what is intermediate term, what is short term? This gives you a really good idea of those particular investment timeframes. And then here's what we're going to do, time entries and exits with minute charts. I do expect to have time after this PowerPoint to take some symbol requests where we can look at actual 5-minute trading charts and see where we would time our entries and exits on those charts. So if you do have any symbols that you're kind of kicking around, or you have a stock you're interested in, or you're just curious about a certain symbol, go ahead and put that into the question box, and I will get to as many of those as I can. So what are the important indicators that I use? I am looking at the price momentum oscillator. This is an exclusive indicator that we developed at decisionpoint.com, and it is basically going to give you the same kind of idea or same kind of information that the MACD will, and it does very strongly mimic the PPO, the price percentage oscillator. I think it's what I always call it the PPO. I never think about what it actually stands for. So you can use the PPO if you're using something other than stock charts. I believe that Thinkorswim does have the PMO in it, and there are a couple of other charting platforms that I believe have the PMO in it, but don't stress if you have a charting program and it does not have the PMO. Write down this note, use the PPO, because it will work very similarly. I use the relative strength index, the RSI. This tells me whether my stock is overbought or oversold. And that gives you a pretty good idea as to whether a stock is showing strength, whether it's getting overbought, and maybe you need to think twice about getting involved in it. And also, of course, shows you when things are oversold. And that would be an interesting time to start getting in, right around the time that the RSI starts to get up there close to 50. We'll look at that more closely. On balance volume, I use this to determine what the volume trends are. It's a very simple volume indicator, which is why I like it. It gives you the picture of volume in a very easy to understand manner, and I'll talk about it on our chart shortly. And then I like to use stochastics. Now, with stochastics, I do not look at this as an overbought, oversold indicator, because in stochastics, you really want things to be quote unquote overbought. You want the stochastics to be above 80. And so we're not going to be looking at stochastics as a bad thing if they get into what you would consider overbought territory. Like I said, it's not really an overbought, oversold indicator as far as I'm concerned. And then I do relative strength analysis, because I not only want to know what the stock is doing against the S&P, but I want to know what the stock is doing against its industry group. And how is that industry group doing against the S&P? I think all of that, all of that is excellent knowledge to have before you get into a stock, because really, when we're going to get into a stock, what are we looking to do? We are looking to beat the market. So we need to have relative strength analysis on our charts so that we can see if that stock is beating the market or not. So here's a chart of all of these indicators put together. So first of all, we have a chart pattern. We have a double bottom on this chart. And like I said, I'm always on the lookout for chart patterns. They're really great insight onto where price is likely to go. And in this case, a double bottom formed, and we did get the confirmation with a breakout here. And that suggested that we were going to get a move at least to this level. We have a PMO that is rising and has given us a crossover buy signal. So pay attention to those crossovers, very important. Here's my RSI. Notice it is in what I would call positive territory. It's above 50. but it's not overbought. It's not over 70. So even though we've had this big rally on this stock here, we didn't get overbought. So there's more room for it to rise. And so that's what I'm looking for on my charts. I don't have what happened to this chart, to be honest. I kind of wish I had the one that comes in after this. I think I'll add that later. So the PMO, we talked about that crossover. Here is on balance volume. And honestly, it's not looking that great in comparison to price because it is in a decline. And price had been in a decline, but we got this rally and we're seeing the on balance volume moving higher, but it hasn't quite gotten above the declining trend. And we also have bottoms that are falling. So maybe not the best setup as far as the OBV is concerned, but something to keep an eye on. Positive divergences are when you have rising bottoms on your OBV and declining bottoms on price. So it looks like back here, from here to here now, that was about at that low. We were down here trying to see if there's a positive divergence here. I don't see it. I see mostly confirmations. Sorry about that. Didn't mean to leave that. The OBV is calculated very easily. The OBV basically takes the volume of the day, and if it was an up day, you add it to the OBV line. If it was a down day, you'd subtract it from the OBV line. So it's a very easy to understand indicator. And I think it's really a lot more powerful than people give it credit for. Stochastics, like I said, not an overbought, oversold indicator. We have oversold readings down here when we hit that double bottom. And now stochastics are rising strongly. This is what I like to see. And I in particular like to see stochastics sitting above 80. You can see on this rally, they got up here, and this is where you're going to see some price strength still. And we did get some more upside, even though we had that pullback there. So stochastics, you want them to be sitting above 80. That's a good thing. Now here's the relative strength. So here's the relative strength of the industry group for Fold, which is pharmaceuticals. And at the time, pharmaceuticals had a rising trend relative strength line against SPY. So you know that you're in a good spot, the sweet spot. It's often said that half of your stock's price movement is going to be due to what is going on in the sector and what is going on in its industry group. So it's very important to have relative strength rising if you can on the industry group of the stock that you're interested in. Then I do the relative strength of the stock to the S&P, and in this case, it was outperforming, so that's what you want to see. And then I do relative strength of the stock to the industry group, and you can see also that we had a nice move up on relative strength. So that tells us that we have a stock that is showing leadership within an already strong industry group. Those are the things you want to look for on your daily charts. But like I said, we're going to talk about timing those entries and exits. So what we need to do is pick our stock and then move ahead and start timing those entries and exits. So what are your entries and exits? I have some pretty simple rules for it. First of all, you use the same indicators that I used on the daily chart. Not all of them, but we do use the PMO, which is primary, and the RSI, which is the other primary indicator on a minute chart. Those are the two I'm paying most close attention to, but I also have an on-balance volume portion on there as well. You're going to use the same thresholds, meaning you're going to be looking for those PMO crossovers. You're going to be looking for the RSI to get into positive territory. You're going to be looking for the OBV to be rising. All of the things you look for on a daily chart, you're going to look for on your 5-minute chart, which is what I use to time my entries and exits. So I use minute charts for the entries and exits only. This is really, when you're going in to determine where to buy a stock, you need to know kind of up to the minute information. And that's why I use these minute charts. I typically use a 5-minute candlestick chart, but you can always move to a 15-minute or a 30-minute chart if you're more comfortable with that. but I find that the closer I get towards that 5 minutes, the better my entries and exits tend to be. But sometimes certain stocks don't trade that much during the day, and so you do need to have a 15 or 30-minute chart to use to time those entries and exits for some of those that we get that way. All right, so our entries are going to be on the 5-minute candle, as will the exits. So what are the rules for entries and exits? Well, I use the 5-minute. I'm going to keep putting that through 5-minute candlestick, 5-minute candlestick. The conservative entry points are when the PMO has a positive crossover and when you have a positive RSI or an RSI above 50. That is your entry. That's what you're looking for. You want to get as close to that as possible. The sell points are really quite simple. All I'm looking for is the PMO turning down. When I'm getting ready to sell a stock, I just need any excuse on the chart. Some excuse to tell me how to get out of it. And when the PMO turns down, when momentum shifts lower on the 5-minute candle, that's almost always a good time to get out. Now we have, those were conservative entries. We also have aggressive entries. And these are going to be based on price patterns because you still can use chart patterns on a 5-minute chart as far as I'm concerned. And how the PMO and RSI are reacting to price. So sometimes you may not want to wait for that PMO crossover. And sometimes you may want to enter even though the RSI isn't positive. So those are things that you have to determine. But again, it's an aggressive entry. So aggressive entries aren't always going to turn out. So you want to try and get to the conservative entry if you can, but sometimes the chart just begs for an entry right away. And that's what we're going to hopefully see on some of these examples that I'm going to have. So here is a 5-minute candlestick chart, just to give you a sense of what I'm talking about and what we're going to be looking at soon. So here is my RSI, here is my PMO, and down here is on balance volume. So what can we find on this as far as our entries and exits? Our entry point arrived here where the PMO crossed over and we got a positive RSI where the RSI moved above 50. With those two things, that got us in over here. And we were able to enjoy this entire ride upward because we got in when we got that conservative entry. So that would have been a great way to time that entry onto this stock. The exits are when the PMO turns down, and notice it had turned down back here, which would have gotten us out right about here. Now, obviously we had a shift in price and we did get a PMO crossover buy signal here and a positive RSI. So we ended up with another entry point up about here. So that would, again, I don't have what happened after that, but that's giving you an idea of what we're looking for. The on-balance volume was rising during this period. So obviously there's interest in the stock and I like to see that. It's confirming what we're seeing here. We've got rising bottoms on price or on the OBV and rising bottoms on price. Over here, I see a declining trend. This was the declining trend coming in right around here. So that's what we're looking for on a 5-minute candlestick chart. And I think really the best thing we can do right now is to look at as many of these 5-minute charts as we can, as well as a couple of daily charts. So I'm going to look and see if we had any. Doesn't look like we have any symbol requests right now, at least that I can find. Maybe in the chat? No. Well, feel free, guys. Go ahead and put some symbols in the question box, and I will try and get to some, but we'll look at kind of what the most actives are doing currently on, we'll look at what the most actives are doing right now on their 5-minute charts, see what we can see. There we go. ARM and ALB. So we got some to start with. All right, let me get my screen share to work here. I always have a real hard time with getting it to work on. Now let's get to this one. Oh, no, that's not the one I want. Before we get started, and it'll allow for more symbol requests to come in, we have the Decision Point website that I'm here to advertise, of course. This is our homepage. Here is the Decision Point alert. And again, this is going to give you that big picture analysis that you need to know before you get involved in the market. It's critical. I can't even tell you how critical it is to know what the trend and condition of the major markets are. It really is going to make a difference in your investing if you invest with the trend and try and stick to that. And we give you the trend and condition of the market with the Decision Point alert. Decision Point Diamonds, as I said, is going to give you 10 stock and ETF picks per week. And honestly, it comes out to more picks per week because I also give you my runner-ups. So I'll look at the scans, I'll come through with my 3 or 4 stocks to present to you, and then I will give you my list of runner-ups. So you have plenty of stocks to look at with Decision Point Diamonds, and we do pretty well. But mainly it's to show you how to find those charts that are set up well and understand how the analysis works there. And since we're talking about those, these subscriptions are very, very affordable. This is your Wall Street Journal. This is what you need to look at every day, this Decision Point alert. As soon as the market closes, we get that report written so that you have it in the evening or in the morning to review before the market even opens for the next day. Again, critical piece, it's only $50 a month, and I'm going to give you a deal on it in just a little while. And then there's diamonds right there. They are $80 a month. They take a lot of my time to do, and so they consequently cost more. And then right now we still offer a bundle. We're not going to be offering this forever. So if you are interested in getting both of these products, I recommend you get the bundle right away so that you'll be able to enjoy the discount that you get for that. Here's where we publish the Decision Point alert and Decision Point Diamonds, very easy to get around in. And then we have chart lists as well that you can look at, an ETF tracker list that basically has most of the major groups within it, as well as the indexes. So that's a good chart list to look at. And then we have our under the hood indicators, which I've talked about at some previous events that I've done. So keep an eye out for that, which reminds me, on our homepage, you need to subscribe to our free newsletter, because this is where you're going to get the information you need. And for these presentations, I do send out the email for that. You also get notified of any of our free articles that we publish, and the trading room videos are available through the free email list as well. The trading room happens on Mondays at noon Eastern. And if you come here, you can register for it. It's a Zoom meeting. The meeting ID never changes. So once you have it, once you've registered, you're good to go for the rest of the time. And you'll get notified an hour before the trading room, so you'll know to get in there and get to see what we're looking at as far as charts for the market. We go through the market in general, and then we look at, like I said, Bitcoin and gold and bonds. And then after that, I do some sector rotation analysis followed by symbol requests. So if you like this whole symbol request thing, you can get that in every Monday in our trading room. Okay, so enough of that. Here is NVIDIA. I figured this would be the best one to start out with. Everybody's looking at this chart. The question is, Where is the buy points and where are the sell points? Let me get my little inspect tool out here for us. So you can see that, that was weird. Let's try this again. There we go. So you can see we had a buy point at the end of trading on Wednesday. That would have gotten us in for a nice move to the upside. Then we ended up with a sell point that came in here, which would have gotten us out, and we would not have had to go through that decline. Or it would have been a good sell point for the stock. We would have managed to get out at a high and not have to go through that other decline. And here's the next buy point right here, where the PMO had crossed over and we got the positive RSI. That was right about here. That was where you'd want to enter. And at this point, that entry doesn't look like it was all that great, because we did end up with price kind of fading out here, setting up a double top. So just seeing the double top here with the PMO turning down and the sell signal that came in, I wouldn't be looking at NVIDIA right now. I think you're at the sell point right now on the 5-minute chart. Now, whether you are on the daily chart or not, that's kind of up to you. I will show you the daily because everybody wants to know about NVIDIA. Oh, I know I have a bigger version. Here we go. So NVIDIA's obviously gone through a pullback, and it did hit the 20-day EMA and it dropped below, which was kind of a good sell signal right in and of itself. The PMO had turned down. We do have a sell signal on it, and stochastics were moving down. So I would not have faulted anyone for selling NVIDIA at this point. I've opted to stay in, but I do have it on the chopping block. Stochastics are turning up again. I think we might get a little bit more of a push to the upside. I'd like to sell on strength because I do think the market is getting ready to have a bad downturn, and NVIDIA is going to be one of the ones likely to lead it lower. So I'm looking for some strength to be able to sell my NVIDIA. I don't want to ride it down. I'm on tons of, I mean, like most of us, a lot of profit on NVIDIA right now, and I could just stick it out. I could absorb a big decline or a correction, but why? You know, why? So I'm planning on getting out when I can get into some strength here, and I think that'll be a good time to sell my NVIDIA. But at this point, I'm watching it. I just think that we're going to get some strength on this bounce above the 20-day EMA. If it fails again a second time at the 20-day EMA, well, I'm just going to have to sell it. I won't get out at a better sell point. I would hope to get at a better sell point, but we'll have to see how that goes. All right, so we do have some symbols in here, a lot of them now, thank you. All right, let your winners run. Yes. And or always sell, I gotta see some of these questions here, or always sell a portion to lock in profits. I think that's a wise decision as well. Good one, Michael. All right. Okay, oh, I'm getting some people saying how wonderful our Monday trading room is, so that's awesome. Can I analyze futures? I don't really have any, it's not my forte, so I'm gonna pass on that one. I'm not gonna try, I don't wanna embarrass myself. Okay, well, these give big picture, market trend or direction, like IBD. I'm not really sure what that question is. I can't answer that. How do you participate in a long trend is going to last so as to minimize whipsaw? How do I anticipate how long a trend is going to last? How I anticipate how long a trend is going to last is with my PMO. I think that it's a really good, gives you a really good sense of when the trend is failing. You can see back here, the PMO was right on top of this correction. And I think it's going to be right on top of this correction that we're going to be getting here. All right, so let's go ahead and look at some of these symbol requests that came in. TradingView apparently has the PMO, so that's good to know. All right, so let's look at ARM. All right. So here is this looks very similar to NVIDIA semiconductor. Notice that relative strength for semiconductors is starting to fail. So we need to keep that in mind. Certainly seeing relative strength still going on. If you want a leader within semiconductors, I mean, NVIDIA is NVIDIA, but this one is actually outperforming the industry group right now. So it is a leader in this area. It's doing okay against the S&P. Even right now, it's starting to outperform a little. So that looks pretty good. Stochastics are turning up. This looks like a pretty good bounce. Like I said, on NVIDIA, we're getting some strength as well. We have a PMO that is what I call surge, a PMO surge. It is a bottom above the signal line. So the PMO is surging right now on ARM, which looks very good. So I have to say, I mean, semiconductors had a sell signal on my PMO yesterday. So I am very hesitant about getting involved with semiconductors. We are in a declining trend here on relative strength. So it is kind of an iffy place to get involved right now. It is overbought, not as overbought as it could be because that RSI is below 70, but still kind of an overbought situation. Let's look at how we would time an entry and an exit here. Well, right now we're at a sell point. Sell point came in back here at this level. So we want to get as close to that sell point as possible right now. Looks like the PMO is in decline, and the closest we're going to get is about here. So we're at the sell point. You can see a rounded top here. Looks like we're going to get lower prices on the day. The buy point came in yesterday, no, earlier today, I apologize. We had that PMO crossover buy, and there's where the RSI got positive, and there you had your entry point. Now, it's hard to watch a stock all day long on their 5-minute chart, granted. Some of us have more time to do that than others. So what you have to do is go and look at those past buy and sell points, and again, try and get as close to those as you possibly can. In this case, if you had come to this chart, let's say back in here, you would have lost a pretty good sell point, and it would definitely be something to think about as far as getting in at that point. But we do have a double bottom here. We do have the breakout. So it did look like we were going to get more to the upside, and this would have been a pretty decent sell point after all. But you can see over here, the RSI started to get overbought. The PMO started to get a little wonky, started to turn over. That was when we had our sell point, and that's when you'd want to get out. And like I said, right now, looking at it, this is more of in a day trading time frame, if you will. My daily chart analysis was really giving you kind of the setup for this. We're concentrating on entries and exits. But this looks like a rounded top, and it does look like we're going to see prices move lower. Could also make a case for a double top here, almost a triple top. Okay, so next up, Albemarle. Albemarle, okay. Well, I don't like the chart pattern. The chart pattern speaks to me as a reverse flag. So that's really not a great setup here. The PMO did turn up, it looks like, but it's already turning back down. So we're getting a PMO top beneath the signal line, which is a very bad sign. Stochastics, while they are rising, they're below 20, which is kind of that threshold of weakness, and it is showing below that level. And look at relative strength. The group is starting to peter out. You can see that the stock is not doing that well against the market. It started to kind of move with the market here, but overall it's in a declining trend, and a declining trend within an already declining industry group. This is not one that I would be looking at right now for an entry. And if we went to the 5-minute candle, let's just pretend we did want to get in. We are at a buy point, an aggressive buy point, because we have the PMO crossover right there. But notice the RSI is not positive yet. So that's a bit of a problem. It gives you this as an aggressive entry. To me, looking at that daily chart, I mean, I'm not really interested in getting involved in this one anyway. This is in a rising trend, but it does look pretty muted. The sell point came in back here, right at this top. So if we're here and we want to sell the stock right now, since we're looking at it, maybe we don't want to own it anymore. The PMO is on a buy signal. It tells me I need to wait it out. I need to wait out as long as I can. I don't think that we're going to get to this level where we had that really good sell point. But it does tell me with the PMO rising that price should continue higher here. We should get a better sell point than what we have currently. All right. PDD. Broadline retailers. Ooh, not a good looking chart. I would say there's going to be more downside to absorb here. Might be a little late for a short at this point, but at the same time, it's lost this level of support, which does suggest to me that it has more downside to absorb. Double top situation, PMO in decline, stochastics below 20, and look at relative strength. The group is doing well, but PDD is not. It is losing relative strength, and that's a problem because, again, you know, you want to find those leaders within the group, and the fact that it's underperforming its group is the reason it's underperforming the S&P. So that's really not the kind of setup you want. But let's say we saw this, maybe we've had enough of it. Let's say I owned it and I'm ready to sell it. Let's go to the 5-minute chart. And the 5-minute chart tells me not to sell it right now. We have a double bottom. We have a rising PMO. The RSI is about to get positive. Actually, it is positive now. I don't know that we're going to get a whole lot out of it. This double bottom is only, the height of it is pretty thin. So with double bottoms, you basically add the height of the pattern to the breakout point of the confirmation line, which would be right here. And once that punches through, you add the height of the pattern to the confirmation line. That tells you where to expect price to get. So at this point, let's see, what is it telling us? That we probably would see a move of this magnitude, which is only 0.36%. So maybe it isn't a terrible sell point, but I think that you could wait. And as a pro, you'd want to wait and see if you couldn't get a better sell point here. The buy point came in back here on an aggressive level. And this is a reason why you may not want to go with those aggressive entries. We had the RSI was negative. So we had the PMO crossover, but we did not have the RSI on our side. Turns out we ended up with price drifting lower. And the question is, but wait, the PMO is drifting higher. It's a very unusual situation, and it does set up a positive divergence where you have rising bottoms, declining bottoms. So that does set this up kind of well for a move to give us a better sell point, actually. But sometimes you're going to see momentum slowly rising, even as price is kind of drifting lower. It's just it's an unusual situation, but you'll sometimes see that. And it does give me a better outlook on this 5-minute chart, I must say. NTNX before its recent pullback. All right, we have a double bottom going on here. So before its recent pullback, you were curious about it. So you can see that we got that PMO crossover. We were already seeing the stochastics rising. Stochastics are going to kind of be the first thing to give you information. The PMO is fairly sensitive. Excuse me. I need a little water here. The PMO is not as sensitive as stochastics, so you'll want to watch stochastics very closely. But what was there to tell us that we were going to get this big gap down? The PMO was no help. Stochastics were really no help at that time. I'm guessing, was this on earnings? Yes, it was. This is one of those good reasons not to hold through earnings, because you just don't know what's going to happen when they come through. But right now it does look like it's getting ready to come back to life. Let's look very closely here at the 5-minute chart. And we can see that the sell point came in back here. Actually, the first sell point came in back here. The PMO surged back here, so you could have made an entry at that point, but then we got this next sell point. And right now the PMO, if you notice that sell point that came in back here, both of these really were excellent sell points because it got you near the top for the day. And it does look like we're going to lose more ground today with the PMO falling currently. All right, so let's get back to let's go back here. Okay, so we looked at the charts. I know that I'm getting down to my 12:55 mark. So I do want to go through a little bit more about my special. Here's again about the Monday free trading room. I get a lot of action in this trading room. If you want, we also have our YouTube website. I don't have that written down here, but our YouTube is at decisionpoint.com. So at decisionpoint.com, there's no dot in there, decisionpoint.com. That is our YouTube channel. We put all of our trading room videos up there, so you can go see some past ones. You can look at what we did on Monday. We talked about Chipotle before its 50-to-1 stock split. We talked about NVIDIA, of course. Goodness, I can tell it's time to wrap it up. My voice is going away. So anyway, I showed you on our homepage how you can register. And if you sign up for the free newsletter, you'll also get information on those free trading rooms. But the best way to sign up is from the homepage on the Register Now button. We'd love to see you in the room. So my specials for today, I want you to try out our bundle. I'm going to offer you your first month for only 19%, which is $100 for $19. 19%. For $19, that's $100 savings on your first month, so that you can try us out, get an idea. I mean, what do you have to lose for $19? I know right now that only buys about a cup of coffee, but I think that you should be able to, for $19, invest in yourself and get the information you need. So highly recommend you check this out. It's definitely the best savings that we have all year, and we would love to have you on board. So again, my website is decisionpoint.com, and subscriptions are, like I said, it's normally $119 per month, but all you have to do is use the coupon code. If it'll let me go over there, it won't. Oh yeah, that's what I have to do. I'm getting the hang of GoToWebinar here. So again, here's your coupon code, WTT19. That will get you your first month of our bundle for only $19. $19. There's no way to not try us out. And I think you're going to stick around. Most of our subscribers do. You're going to find that the DP alert is just something that you need to see every market day. It gives you everything you want to know. It's your one-stop shop. Like I said, you can read that in very short order. It doesn't take too long, and you'll get a really good sense of what we do in the market. All right, that is my conclusion. I finished on time at 12:55, so.
Excellent. That is a sign of a great presenter right there. Thank you, Erin.
Constantly looking at the clock. That's what I have to do.
Yeah. Timing yourself, it's a skill. It's a great skill. Thank you, Erin. Great information. Love your analysis of the markets. Your insight is incredible. Truly gifted. You had the audience giving you a ton of tickers there. It was engaging. We really appreciate it. I just want to thank you so much for sharing how you time your entries and exits. Thanks again for participating in our event and sharing your insights with our audience today. Ladies and gentlemen, that is Erin Swenlin. You can always find her at decisionpoint.com. That's decisionpoint.com. We've also placed Erin's promotional link in the chat box. Erin, if there's anything else you want to add into the chat box before you go, or check messages.
Yes, I will go through. Yeah. I'll go through the questions and type my answers to the ones that I've got.
We appreciate it. Appreciate it. Okay. All right, thank you. Our next presenter will be in very shortly. He is a crowd favorite here, and I think he normally presents after 4, so he might be a little bit tied up with the markets. But while we wait for him, I might as well just give his introduction now. Our next presenter is a crowd favorite with uncanny insight on the geometric patterns the financial markets form. He was born and raised in New York, where he fell in love with trading while visiting his then girlfriend, now wife Lisa, at her job on the NYMEX floor in the fall of 1982. In 2008, he moved from New York to Las Vegas and established Omni Trading Academy, where he teaches select students the Omni triangulation and trading. He is filled with vast knowledge of trading, analysis, and trend formation. By simply following trend lines and identifying formations, the chart will tell you all you need to know. As he has said many times before, the chart is just a graphical representation of the day's news. Ladies and gentlemen, here to present, according to the charts, not the word on the street, is the great Mr. Oscar Carboni of Omni Trading.
Thank you so much. Let me show you my screen. Anthony, thank you so much. Traders Corner, Marie, we love you guys. We thank you for inviting us. And fantastic presenters before me today. And I hope this has helped a lot of you out there. And is my camera on, by the way? Am I presenting? I can't see what you guys are looking at.
Yeah.
Camera's on, we're presenting.
Yeah, impressive trick you did there. Not everyone can get that to work.
I'm going to say this. Good morning, good afternoon, good evening, traders from across the globe. Traders Corners fans, thank you for tuning in. You know, as I said, Anthony and Maria are so great. They put these educational days together for us. It's really like a course almost. I believe that these days, these opportunities are our chances to help educate the trading community. So not so much of a moment for me to try to sell you anything, because I got a bunch of you together. I can always sell you stuff later when you come find me. But this is to teach you some things that could help you move forward with the markets. So what I'm going to do is I'll show you after we're done with the presentation where you can find me in my free trading room and all that good stuff. But what I want to show you today is a group of charts that you can call a portfolio that you can basically purchase and ride this AI revolution straight up until it finally comes to an end. We are in an AI revolution, I promise you. And here's what I will show you. Look at the date of this video. I did a webinar on 2/28/2024, so February 28th. In that webinar, I gave out a host of alternative stocks that will go up with the AI revolution if you couldn't afford a high-flying $800 to $1,400 NVIDIA. So in 2/28, I said, listen, here's what I'm going to show you. Fantastic trades to get into. Hold these for the whole run. And then about a month later, we revisited that very same portfolio, and we removed 2 of those AI play stocks. So I'm going to go over those with you now and see if I can show you what you should be following and why and what's going on out there. So welcome to the AI revolution, kids. It does not matter what people tell you. I have been trading. I started on the trading floors when I was 18 years old in 1982. I have traded through, analyzed, and taken traders around the world through every debacle. The 1987 savings and loans debacle, the Gulf War, which was 1990, the 2001 dot-com crash bubble, whatever you want to call that, the 2008-9 crash, the 2012 flash crash wiggle, the 2020 COVID hit. We have lived and traded through every bit of those. And here's what I'll tell you. It does not matter what the fundamentals are. I promise you this. The chart is merely a visual look at all the fundamentals, government reports that have been released, ones that are going to be released, and traders' reaction to such. It's all built in these charts. If you are trying to take a fire hose of information being shot at you from every direction of news, and you're going to decipher that news and decide where a market's going to go, you're a crazy person if you think you can do that. It's not possible. You know what can do it? What you're looking at right there. This chart shows you everything that is ever going to happen and everything that did happen, and it shows you what comes next. Now, I have been a master at holding classes, and I do a YouTube video every night to tell traders what will happen the next day, and we use these charts. And here's what I can tell you. You are in an AI revolution. When I was a young kid in this business, the computer revolution came through. You know what the markets did? They rallied for 6 to 7 years. Nothing goes straight up, right? Nothing goes straight up. Sometimes you get down movement. They rallied for 6 to 7 years. Then the internet hit, 1994. We went straight up to 2001, 7 straight years. The AI revolution is 2 years old. It is a baby. It is going to carry this thing for the next 5 years. I don't care what I've heard before this presentation. That's what happens when a revolution comes into our marketplace. Before the computers was the typewriter revolution, and that lasted a long time. These pushes, like the internet, last for a long time because the technology hasn't even been thought of yet that we're going to be using in AI 3 years from now, and it will push for a while. So NVIDIA, this young industry will keep the market going up. Nothing goes straight up. NVIDIA was 1,400 before the split. So before the split in February, I said, let's go through a host of charts. I want you to write these down, and I want you to make a portfolio and get involved in these. Now, futures trading, stock trading, ETF trading, I don't care what you trade, crypto, it's all extremely risky. How do you mitigate your risk? Put your stop in first before you ever enter into the position. So if a flash crash like 2012 happens, your stop is in first. One way to mitigate the risk. Now let's go take a look at this portfolio. This is a fantastic alternative to the high-flying NVIDIA or any. NVIDIA is still way more expensive than this. Omni started liking it here. It's called the Global XAI Technology ETF, AIQ.O. I love this little gem. Look at the way Wall Street just plays off of 2 things, moving averages and geometry when it comes to this Global XAI. Now, what I mean by that is look at how well they queued off of this average every time they had an opportunity. They queued off this average, just queued off the 27-bar moving average. I call it an algorithm because a moving average is actually an algorithm, whether you know it or not, just a simple one. They queue off every time they get an opportunity. So right here is when we did the webinar. Right here on this day, I did the webinar and said, I want you to get involved in these stocks I'm going to show you right now. They're all fantastic for AI. Look at how much higher we are. from when we did the webinar. Webinar was here. Look at how much higher we are now. Now, they are queuing or keying off this 27 bar moving average or algorithm, if you will. What else are they keying off of? The 120 bar. Just write these down and use them on this chart. It goes back forever. It just goes back to the beginning of the chart. They just seem to be using it in their algorithms on Wall Street. I'm going to show you what to use. So if you're looking for the bigger outside envelope, if you will, you go with the 120 bar simple moving average or algorithm. And when it's quicker moving, they're bouncing off the 27. Look at just how well it works. There's no need for me to prove this out to you, but now look at here, the 120. Look at this. They're loving the 120 on the outside. So what's happening with this simple AI play is now it's getting into an even steeper rally. And I've heard people talking about the top is in, the top is in, everything points to the top. And I tell you right now, I don't see everything pointing to the top yet. Not yet. Now you see how we're in a steeper pattern. We were in this green moving up slowly. Then it got into a steeper one here, this blue one, another channel we got into, nice and steep, right? There's the bottom of it, here's your top. And now it's starting to accelerate to an even steeper, this one here. All right, so let's lighten up the one that it's not really keying off of at the moment. The important one is going to be, of course, watching if we stay inside of here. Now, if you don't think that Wall Street watches the geometry like hawks, let me show you a little trick. I have a line, goes from this high to this high. I show this to people in my Omni camps all the time. They flip out. Now, I have grown up on Wall Street. I promise you, I know exactly what we're looking for on these charts. I was there when charts were point and figure, and I used to write them with pencil on graph paper. I was there to help computerize the charts. I was there to help teach TradeStation, and you name it. If you name them, I worked with them in the 80s and 90s to help get these charts off paper and on the screens. I know what these guys look for and build. And here is what happens. They use geometry. Watch this. This simple trend line from here to here. I'm going to extend it. Look at here. How did they know? How do they know? How do they know? Look at this. Let me blow it up for you. Because Wall Street's watching. This stuff is simple. I am going to keep this entire webinar very simple for you. Look at how simple that was, right? Look at all the times that you could have used it. So if you know Wall Street is watching geometry and watching these averages, you don't need to be a genius to figure out what to do. Follow them, follow the easy, smart money. Now, I have the Oscars Market Navigational Indicator, the Omni, which tells me where to get in and buy and sell every single day. This is more abstract to tell you which direction we are going in throughout, hopefully, the rest of this year. This is moving higher. It's above support. This would have been resistance, which is now support. It's moving higher. It's bouncing off the averages. It's starting to take on even smaller averages. It's all about market geometry. Wall Street likes the 27 and 120 bar algo on this puppy. Write it down. Take a look at it. We started liking it here. We started telling fans about it here, and it's all the way up here. This is one. There's many more to come. Next one. Bots, look at this bad boy. In fact, that was the chart that was on that video I showed you from 228. That happened to be the chart they used for a thumbnail. Bots, same type of algo being used, but this one's the 28 bar instead of the 27. Look at how well. I mean, Wall Street just loves this thing, and they make it simple for us. When it breaks, you know you can get short. When it gets above, Wall Street's going to get long. Of course, the Omni would time us and tell us exactly when to get in and out. More abstract, keeping it simple. Once again, we've got an outside average they love and an inside average that they play when it's moving up. The outside average right now is this big orange one. It's the one keeping us in check. The webinar was done here. We advised get long bots as well. Make a portfolio out of this. So bots is higher since we got in. Granted, moving sideways, but certainly higher. Holding its averages, I think it's going to do just fine. Looking at the chart, I don't think anything because I don't know anything about the company, nor do I care about it. The chart tells me we should be fine, and we have fail safes where we would get out if things changed. But BOTS is another one, Global XAI ETF, very inexpensive, right? It's in the 30s. Make this part of your portfolio. Next one, I showed back in February, Buzz. Now look at how fantastic this one is. This is a very affordable alternative to high-flying AI, NVIDIA, or other stocks that cost more. This is in the 20s, right? But there was an algorithm shift. They were using this right here. If you can see, they were using this blue average for a long time. Right here, we have shifted. So watch this. I want to tell you to change. If you watched my last webinar, I want you to change the average that we're using now. And we're going to make this as small as can be, so it's still on the chart. But here is what they're keying off of now. They've gone to the 60. Check this out. I'll just make it nice and thick for you if I can. There we go. Check this out. They started to key right here. It's separated, and they started keying off this average. They sell it when it's above, they buy it when it's below. They're buying it right now. It's back above the average they were using for the last 9 to 10 months. The algorithm has shifted to a 60 bar, telling you they are bigger buyers of dips than they were when they were keying off of like a 27 bar moving average. So they're starting to buy the thicker algos, which means they believe in these moves. We got involved in Buzz.K. Right here, we told you guys to start taking the trade, and we are much higher than that now. So this stays in the portfolio. And you know, if you ask me, you're building a bull flag right here, or some kind of channel at least, right? You got something going on right here. Let's just do a parallel of that and see where it drops in. Boom, you got something going on right there, which will most likely end up being considered a bull flag or some kind of a consolidation channel. Either of the two should get you to move higher here. So you've got that happening, right? And that's on another one of these insanely good alternatives to NVIDIA. And of course, now that NVIDIA did its split, you can always afford NVIDIA, but look at all this other great stuff that you should probably have in your portfolio. Let's go see what else we have. This is all AI play, and then we'll get to some crypto. Now, this one just doesn't stop going up. I mean, this just won't stop. Talk about market geometry. Look at how Wall Street just queued off of this. Check this out. Look at how it was in this channel at first. Wall Street used every single opportunity when it hit that channel to do something about it, every single time. Every time you got near this channel, Wall Street reacted, and it coupled with the average. Boom, boom, boom. You fell out of it. What's the first thing that happens? They start another geometric rally back up. I promise you, Wall Street watches more geometry than you would ever dream of. Let's see how far back this goes. Look at how far back that average works. And they're using it, and this stuff is simple. If you can't do this, you need to hang up your technical analysis shoes. This is about as simple as it gets to follow these cats on Wall Street. We're not trying to get intricate. We're not talking about the float, the EBITDA, the insiders. We don't want to confuse anybody. Simple. Let the chart tell you what's coming next. And I promise we are very good analysts, and we'll tell you what's going to happen next. You just got to come hang out with us. The chart will tell you what's going to happen next. I am just the chart's messenger boy. Let's see what else we have out there. Oh yeah, look at this guy. So Loop. Loop was working on the same 27 or 28 bar algorithm. The last three charts I showed you, they were all working on the same algorithms because Wall Street, they all make their funds sort of the same. Why? Well, if I am trading with Goldman Sachs and you're trading with Morgan Stanley, and if you're making more money in a fund than I am, I'm going over there, right? So they all have to sort of build the same systems and keep sort of the same returns happening so that no one jumps ship and moves to the other. So that's why these things behave alike, because Wall Street funds behave alike. So look at the average and the trend line. This is more proof that they love geometry and averages. When they come together, Wall Street reacts. Every time those two come together, an average and a geometrically properly placed trend line, Wall Street is going to react. So You've got the AI play, which we started liking back here, and it is definitely higher since, and in a very nice channel moving up. The outside algorithm or average is the 125. The one to key off of when you're day trading is the 27. In fact, I would take that away. I don't like the way the 27 is working in here anymore. I think the 27 stopped being useful right there. So I don't know that I even like this average anymore. I don't use averages to trade. I use the Omni to trade. I use averages just to show me what direction we should likely go in. But I don't know that I like this average anymore. I love the 125. It's much more solid and giving much better signals. What happens down here, we'll find out if it ever gets there. So another one is loop.k. Put that one away. What else did I show you guys in February? Okay, this one. In the second webinar, when we decided to remove 2 of our stocks in this portfolio, learns.k became one of them. I did a webinar on this day and basically said we were going with green arrow, green arrow, green arrow, holding the average, holding the geometry, no problem at all. Suddenly we break under the geometry and we start ending up with red arrows all over the place. And at this point I said too many red arrows compared to green, exit this from our portfolio. So we have removed learns in February. In April, we removed learns from the portfolio. So this is out. If you didn't watch that second webinar and you're still long all of these, it hasn't dropped. I mean, it's still more expensive than it was when we got in, but it's just not going as quickly as the others, right? So we got in up here, or at least we told you about it right here. It's trading here, it's higher, but this one we have removed because it's just not working as quickly and as strong, if you ask me, as the other plays that we've been looking at called AI plays. So keep that in mind, learns gets removed. That was one of the 2. The next one that we looked at in February was the WTAI.K Wisdom Tree AI Fund. Another one we removed from our portfolio right here on the same day when we did our, actually it was here that we removed it in April. When we did our second webinar to say remove some of these, when we fell under that trend line and we were below the average, which was unusual, we also exited WTAI.K from the portfolio. So if any of you actually built a portfolio based on what I showed you in the February 28th webinar, this one was removed 2 months later and it shouldn't actually be in your portfolio anymore. Oddly enough, it's moving higher, but once again, not as nicely as the other ones I've shown you. So those 2 out of the whole gamut have been removed. Let's see what else we have. I hope this will help you. I hope you look at some of this. All right, so NVIDIA, as we know, beautiful chart. This should keep going forever, but that's not the one I wanted to show you. Here we go. UBOT. We have a possibility of one more removal from the portfolio, which is this one right here. We will remove UBOT as well as the other 2 that we've already removed if you fall under here. If this support does not hold by next week, you are removing UBOT.K out of our portfolio. It's still in for now. If you end up trading a few more days under, well, let me just make this trend line usable. If we end up doing a few more days under this big fat trend line right here, which I will draw for you now if it allows me to. Of course, it didn't allow me to. Anyway, if you end up making daily bars underneath here, this guy goes. Remove him. Everything else we've talked about stays. This one still stays if it gets a boost and heads back up next week. So keep that one in mind if you have built a portfolio based on our previous webinar. And what else is out there? There's a few more. This guy, Think, or THNQ.K, it's Think. This guy, just fantastic chart, fantastic everything about it, and seems to just be in love with the same average since the day it found it. Just loves these averages, loves bouncing off of them. See that? Underneath, we start selling, get above, we start buying. Underneath, we sell as quick as we can, we get above, we start buying. Just got to it 2 days ago, the buying already started in a nice upward channel. We got involved at around here, and we are now up here. Well, we are now up here. So far, so good. That is absolutely a bull flag building right there. If you can't see it, even though these trend lines will not let me make them smaller, but you got something happening right here that we would probably consider a bull flag. You know what, let me just get a parallel of this line instead, make life simpler. And that's some kind of flag building. And if we extend right, you can also throw something in here and call it a pole. And you got a flag right there, take off the extension. Right, no extension on there, make it nice and thick, and you'll see that flag come to life. So now we have a flag building on top of the averages, on top of holding that spot right there. I say we just keep holding on to these ETFs. Some of them are funds, some of them are ETFs. It will say that on the chart if it's a fund or an ETF. And let's just make that a little bit smaller, and there you go. You should be able to now see that there is some kind of a flag building here, and you should end up moving higher. So we like Think Q as well. That's going to stay with us. Look at this guy, another one that Wall Street just loves the geometry, loves the algorithm, the average that we're using right now. And it goes back for quite some time and works really well whenever you get near that average. And you can literally just take this trend line right here and just move it to here, right? And you've got the same sort of action taking place. Higher, higher, higher. This stuff just wants to keep on moving, right? You're in a nice big fat channel moving up. You can see they used the geometry on this channel all the way till they got to here, and then they just fell under it. Now we're testing the average again. Look at how pure and clean the average can be when you get to it. It's pure and it's clean, right? You see that? Pure and clean. Up here, same thing. So it's simple, simple techniques that we know Wall Street uses every day to make their trading decisions. Geometry, certainly your moving averages. Wall Street is watching. This is the AI revolution. It's acting much like the computer age, the internet age, you name it. We're acting the same way. I expect it to last for quite some time. What else is out there? There's a 12. All right, so we're out of those. Now, we're going to go back to NVIDIA for a moment because I just want to remind you, it's become affordable. This thing was $1,400, $1,000, $1,400. The average trader, sometimes the average fund could not even afford to get in. Well, now that it's down here at 117 to 128, everyone in the world can afford to get in. That's going back up, kids. It's just going to take off. Remember, people loved it at $1,000. They loved it at $1,400. They're going to love it at $126. So that's going to go. And what else is out there? We've got so another thing I wanted to show you guys was this. You know, a lot of AI is mixed in lately with our Bitcoin, Ethereum, crypto. And of course, the algorithms that they're using on Wall Street are simple and exact, just like the ones we use on everything else on Wall Street. Look at how well this one works. You ever see anything that easy? Easy, simple, simple. And they use it just about every time. You're inside of a massive bull flag in Ethereum, right? And it just keeps hovering around inside that flag, keying off the average. Wall Street's watching, it's going up. Nothing goes straight up, but it will go up as well. And the other thing that will also move up because of AI and because crypto is what it is these days, because Bitcoin and Ethereum have been approved for Wall Street to use for fund management, they are going to also be part of the AI revolution because just about every fund you can think of is coming up with AI crypto trading programs so that they can put people's 401ks into Bitcoin and not have this insane volatility. So in other words, You cannot take somebody's life savings called the 401k and put it in a market that does this. No way. You know what I'm saying? You don't need to call some 80-year-old man and give him a heart attack and tell him that you lost half your money in one day because we put you in Bitcoin. So what Wall Street has been doing for the last few months is building out systems and testing those systems so that when they do finally start putting 401k money in Bitcoin, it will be completely hedged in a hedging program that when it goes up, they make money. When it goes down, nobody loses. They have to get that sorted first before they plow in. They're not just going to take your 401k and stake it. You know what I'm saying? That doesn't happen. 401k is for you to retire on. It's got to be slow moving, quiet, and steady up. None of the crypto we've seen since the day they were born are slow moving, steady, and quiet. So they're building out hedging systems so that they know exactly how many options they'll need to be short or long when they're in crypto, when they're in Bitcoin versus Ethereum. When they're done testing out those systems, they are going to plow into Bitcoin and Ethereum. Now, you know that we have a target. We've had a target for the last 5 years, and it's a year and a half away now, 85,000. And, you know, people thought I was crazy at 12,000 when I made that call. It's hit 74,000 already. I'm not so crazy, am I? It will be there just about on my anniversary date, a year and a half from now. I've made tremendous calls in Bitcoin since it started. The beauty of Bitcoin and me, I am the best analyst you will ever find on this planet. I promise you, where I was trained on Wall Street, no one has had this sort of training. Bitcoin was born before my eyes. I've been able to chart every tick of Bitcoin since the day it was born. We've made lots of money and lots of great calls on that because I know everything about it. I do not need to know the fundamentals. I don't care. I know everything about that chart, and all the forward information is moved forward based on the geometry on that chart, as I've already proven to you in several other charts during this example. And if I recall, I believe that was about all I had to show you as far as this presentation. I just wanted to make sure that you knew what stocks you should have in a small AI portfolio and which ones we've removed 2, possibly a third out of that grouping. If you guys like what you've seen and would like to join me, I am so easy to find. I am literally sitting in a live trading room, basically 24 hours a day. I'm in one right now. I'm waving to you. I kept that live the whole time while I did this seminar. You guys can easily hang out with me and the other traders around the world in this trading room. And guess what? The cost is $0. Not even a credit card is required. If you just simply come to livewithoscar.com and register, no credit card, no nonsense. You just fill out a username, password, shoot if you're going to ask for an email or at least a code, you are going to get an email. Here's one problem with the email. I promise you it will go to spam. That's where you will find your email. Go in your spam folder, unspam it, come to livewithoscar.com. You will click Oscar's chat room, and I promise you will be in here with me just like that. No credit cards, no nonsense. I don't do this to take people's money. I do this to help people. So if you want to hang out with me, I could show you much more intricate ways of getting in and out of these markets. That was an abstract, simple gift to you, if you will. I hope you guys, some of you guys, gals, put these trades in your portfolio. Of course, you can always call me if you think maybe you need to get out of something, but that should work for the next, couple of years. Those things should just go on for the next 3 to 4 years. And I host, but I have a 4-day training session held live in Las Vegas where I literally teach people the Omni, which is Oscar's market navigational indicator. I teach the Omni right here in my home office in Las Vegas. I'm very selective who comes out. You can absolutely be a novice. We love novices, or a 50-year pro, but I'm very choosy about who comes out here. It's my home office where my wife and children live. And one thing I'll tell you, I don't know where you've bought programs from or where you've bought systems from or approaches, but when someone invites you to their home where their wife and children live to teach you for 4 days, they're not lying. That's not where they should be inviting you if it's garbage. You know what I'm saying? You don't invite people to your home if you got something to sell them that's not going to work. So if you come hang out with me in my 4-day Omni camp, just go to omnibootcamp.com, omnibootcamp.com. You can see a quick video about me. Who cares? What I want you to do is click inquire here and fill out a quick application so I can call you on the telephone and we can discuss whether or not you fit, whether or not I would qualify you for a seat at my 4-day training in Las Vegas. Barring that, everything I do is free. I do nightly YouTube videos just about every night. If I can find one quickly, I'll just show it to you. Every night there's a YouTube video that comes out from me, and in that video, basically it will tell you what's supposed to happen tomorrow. And then I'm live in that trading room acting out every single thing I told you in the video last night, taking Omniacs around the world through our trades. When I send out a trade signal, it's kind of interesting. Let me see if I can do a quick one for you. What I'll do with a trade signal is I will send you this. When I'm going to trade, I tell my Omniacs around the world what we're trading. They get this. It wakes you up, it rings, it tells you what to do. You can have it read out to you in words if you need it to. At the same time, I've sent you a Discord telling you exactly what to do. I've sent out a text, a flash update. I speak it in the trading room. You cannot miss a trading signal from me unless you stuck your head in the sand and pretended you didn't get it. You know what I mean? But we send out signals, everybody gets them on time. So if you want to hang out with me, as I said, it'll cost you nothing. Come to livewithoscar.com. Those videos I put out, by the way, I'll just click on a random one. You never know what we're going to get. I put something like this out just about every night on YouTube.
Buy on blue.
That's not it.
Red.
That we got to live with. That's called a commercial.
Extremely accurate.
Well, good morning, good afternoon. Just about every day you will find a video from me that will come out and tell you exactly what I want you to do, where we're going to buy, where we're going to sell, and then I show you the chart and the reasoning why we are going to take those trades with every single trade. So I've got a plan. It's already planned the night before. I tell you guys about it in a live video. Then I sit in a live trading room and act that plan out 24 hours a day, 6 days a week, because markets are open on Sunday. So I invite you to hang out with me for absolutely free. Make sure you go to Live with Oscar and sign up. It's nothing. Give it a try, kids. I don't buy it, I promise. You will have a good time hanging out with us. The Omniacs have been to camp. We'll hang out in my trading room. I have a fantastic crew of traders in my trading room, and I think you will find it a great home, especially that it's free. You might as well give it a try. With that, I give my time back to you, Anthony. Thank you so much.
Hey, thank you, Oscar. What a great presentation, as usual. Ladies and gentlemen, you heard it here on Traders Corner. According to the charts, not the word on the street, and that was Mr. Oscar Carboni. You could find him daily in his chat room or his nightly YouTube videos, which I watch every time he puts a new one out. They're extremely fun to watch, and or his live streaming on his YouTube channel as well. You can also keep up with him on Twitter, StockWits, LinkedIn, Instagram, Facebook, Discord, etc. Or you can go to his website, which is www.livewithoscar.com. Yeah, great presentation. Love the videos. I'm a huge fan myself as well. Spot on analysis. Please come back, Oscar. We appreciate it, man. You're great.
For having me. If I can help anybody, please come join me at my website. Go to my free room. I'll help you in any way I can. Thank you all, and remember this. You know, I've got an adage I say at the end of every video, right?
Absolutely, yeah.
I've got little kids that call me and tell me they sing this with. Are you ready? 1, 2, 3. Stops are in. Emotions are
out.
Traders, put those stops in first. It will take a lot of the emotional decisions out of your decision making.
Thank you, Oscar. We'll always remember that phrase, by the way.
Thank you so much. Appreciate doing this, and I'll show up for any of these for you. Thank you so much, guys.
Thank you. We appreciate it.
So long.
All right, ladies and gentlemen, that brings us to our last presenter. Very, very great trader as well. Our staff at Traders Corner sifts through hundreds of pro traders and brings you only the most credible and qualified traders to participate on our shows. And up next is a professional options trader who has been trading and mentoring traders for over 13 years. He has a Reddit verified performance and has consistently maintained a 90% win rate over the past several years on trades he has taken in his options live trading room. and has one of the most successful options alert services in the industry. His calm and confident demeanor lends to a trading environment that is stress-free. Ladies and gentlemen, here to present my top strategy to trade earnings report is Mr. David Wyse of Right Line Trading. Welcome back to Traders Corner, David.
Thank you very much. Appreciate you having me on here. Last one of the day.
Yeah,
Thanks very much. I know it's probably been a long day for everybody. Great presenters here. I've heard Oscar a few times, and I'm always entertained. Yeah, my name is Dave. I'm with the Compass. I have a Compass Options live trading room and an alert service where we trade. Most of our trades are fairly quick trades. We have intraday trades, and we do some short-term swing trades. And I'm going to go over the methodology we use. I'm also going to go over the alert service, some of our results that we've had, and I'm also going to spend some time in here. I like to do some basically some free education each time I do a webinar. Today we're going to focus on time spreads. So once we get through the first part of the presentations, we're going to talk about time spreads, which is what I use to do trades, to do earnings, trade over earnings. It's the only methodology I trade over earnings. It's a non-directional trade, and it's been very successful. So we'll go over the details for that, especially we've got earnings season coming up in a couple of weeks here. So I think this is a good time to share this particular strategy with everybody. So again, good afternoon or good evening, or what time frame you're in. And again, my name is Dave, and I'm with the Compass Options Trading Room. So let me first get the usual disclaimer out of the way. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose, and neither myself or Right Line Trading are licensed financial advisors. Okay, we'll get that out of the way. And if you have any questions, you can put them in the question box. I'll try to answer them as the presentation goes on. If you have to leave or something I can't answer, if you put your name and number in the chat box or your Skype username, Rory from Right Line will follow up with you to answer any questions that we can't get to or I can't answer. All right, and again, I appreciate everybody being here right now. One of the things we're going to talk about today is a system I use. It's a piece of software that runs on both Thinkorswim and NVIDIA and Ninja, and it's called the Compass system. And this is just basically some graphics of what it looks like. I'll go over it in detail. The key on this Compass system, what it does is it tracks institutional involvement in trades. We find out if an institution is moving a trade or not. We take them if it is, and we skip it if it is not. All right, and this is just a graphic of what the alert service looks like. You send out SMS alerts right to your phone. We take only the very highest probability trade setups. When we find them, we send them out. It'll go to your phone probably in about 30 seconds or less. And I'll go over the details of exactly how that particular service works. All right, so before I get into the presentation too much, I want to go over something that I talk about at every webinar I do, and that is to try to understand what is moving the market, what moves the market. It's really important, because if you know what moves the market and you can identify it, you can identify those that are moving a market. When they are, you can follow them, and that's really the key here. This is basically just a graphic representation. These little marbles here, these are retail traders, such as myself, and I suspect most everybody else in the room is a retail trader. We have no ability to move the market. We can't create trends, we can't reverse trends. There's really just nothing we can do to move the market at all. And if we're in trades, and the institutions, which we're going to talk about in a minute, is this big ball back here, then all you're going to get is you're going to get a lot of chop, you're going to get a lot of chaos, and it's very difficult to make money. Keep something in mind, and that is we as retail traders take our profits, take our money from other retail traders. We don't take them from the institutions. We're taking them from retail traders who don't have as much information as we do, and the tools that we have here in the Compass system and in the room I've got, I feel like we've got bazookas for other retail traders are in there with pop guns because they don't have the information we have. So this is what moves markets. This is the institutions. Institutions are investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, on and on. And also hedge funds, hundreds and hundreds of hedge funds. they have billions and trillions of dollars to trade and invest. And you also have to add to that pension funds, big pension funds. And you also have to put in there mutual funds, T. Rowe Price, Vanguard, all those big mutual funds. They all have billions of dollars to trade as well and invest. And it's important for us to figure out when they are pushing a trade and when they're not in there. And we as retail traders will make money by following the institutions. And the institutions, by the way, are made up of desks. They have manual traders, but they have mostly computer systems, which are called algos. And algos do a majority of the trading in the market, probably 80% or more. And it's important for us to know when they're in there and when they're not. All right, so that gives us a little background on what moves the market and what we're looking for to become a consistently profitable trader. In the room, I've got a couple of rules that we trade by. Pretty simple. We trade the best and skip the rest, which means we're just looking for the very best high probability trade setups that there are. We're not going to try to take any kind of trades that are mediocre trades. We're looking for just the very best trades. So we trade the best and skip the rest. And another rule is our objective is not to make trades. Our objective is to make money. And this is important because a lot of retail traders feel like if they're trading, they're in front of their computer, they need to be in a trade all the time. They need to be trading all the time. And that's probably the worst thing you can do. We only want to trade when the trades are high probability and we can make money on them. Otherwise, we have to be patient and just wait for the trades to come to us. All right, so those are our rules. Now, to become a profitable trader or to be a profitable trader, you need an edge over other retail traders. And the edge we have here is we have our compass system, which I'm going to talk about, which tells us whether the institutions are in there or not. We only trade stocks that have relative strength or relative weakness. This doesn't mean RSI. Relative strength and relative weakness is how is the trade stock that you're looking at trading versus the S&P 500 or the SPY or the Qs. Is it got, if the Qs or the SPY is moving sideways and down and your stock is moving up consistently on a 5-minute chart, it's got relative strength. So it gives you it increases your edge if you're trading a stock long with relative strength and short with relative weakness. Because if the market turns on you, your stock is not going to perform as badly as the SPY is, so it'll save you some money. It'll get you out at a profit or a very small loss, even if it reverses hard, because the stock won't reverse as much as the SPY does. We want to trade with the market trend if there is a market trend. A lot of times there isn't. There was no trend today, yesterday, just chopping around. And we also want to buy near support and sell near resistance. In other words, don't chase stocks when they take off and start running high. You suffer from FOMO, a fear of missing out, and you don't want to do that. You want to wait for the stock to come back to a support level or up to a resistance level, reverse back into the original trend, and then go ahead and join the trade there. All right, so that's important. And how does this compass system help us here? What it does is it identifies the highest probability trade setups while sidestepping the setups that look good but will fail more often than they succeed. And we do this by identifying when institutions are driving a trade and when they're not. This is come back to what drives the market. Institutions drive the market. The compass system is going to analyze. It analyzes complex trading data and displays the results in an easily identifiable visual format. And we'll go over a bunch of these so you can see what they look like. But it's this visual element makes it possible for even new traders to be able to identify whether you've got a high probability trade that's bullish, high probability trade that's bearish, or a neutral trade that you don't want to be in. It really simplifies getting started in the business and not having to dig into a lot of technical analysis to find these things. I mean, I do a lot of technical analysis, but when you're first getting started, it takes a long time to learn that. All right, so that's how we get an edge over retail traders. We only take trades that are being driven by institutions, and I'm reiterating this because this is really important. Trading stocks that have relative strength or relative weakness and trading in the direction of the overall market. These things right here will set you up with a likelihood of having about an 80% win rate without digging into it any deeper. Because our trades will be supported by institutional buying or selling. The stocks will be outperforming the SPY, and they're going to be moving in the direction of the overall market. Very important. All right, so this is what we look for in the room. This is where my trades come from, and we'll show you how that's done. Okay, so I want to just take a quick look at the least recent price action. And the reason I want to do this is I want to show you the compass system on a daily chart. Let me just, this is the compass system on Thinkorswim right here. This is the SPY on the daily chart. This is a daily chart. This is what the compass system looks like. This is some of the scanners we've got built into the compass system that come with the software. But let me move that out of the way. What I want to show you is I want to go back to November when the market switched. The market turned up in November, right here. And if you look at the compass system here, these indicators, let me just go over them quickly. We'll go over them again later. But the main ones, the most important one is this is the multi-time frame momentum. This is the current time frame momentum. So this is telling us what the momentum is on the daily chart. This is on the 1 day, 3 day, and 9 day. This is the long-term trend, and this is a derivation of money flow. All of these that are green or blue, it's bullish when they're lined up. When they're red or yellow, they're bearish. When you've got a bunch of mixed colors, they're neutral. But you can see here that the market turned right here around 11:20. Everything went green. The compass system is telling us everything is green. We want to be trading in the long direction, even if we're just intraday trading. And you notice how long that the compass system tells us that the market is staying green. All the way here from November 20th, all the way out to here to the end, through the end of December. And it was telling us to stay long the market. And then we started getting yellow here. This is when the market started to fade off. So we had green up here, but yellow here. And then we're starting to be getting these mixed colors. So this tells you not to take any long-term trades here. You can still intraday trade, but you shouldn't be swinging trading very much. And then we went back to some green again in 1st of January. Again, see how easy the compass system is to see, telling you what the market's doing. Bullish market, still bullish, even though we get some hesitation here, still bullish. And all the way until we start getting a bunch of this red. Now notice in the SPY, this was a really key candle right here. This was on April 4th. This was a bearish engulfing candle, a really huge candle compared to the other size. That was a warning sign that things were changing, and the compass system picked it up immediately. And then it's even though the market was going sideways, you notice we stayed green, yellow, and red here, telling us that there's trouble ahead, and that's exactly what happened. Now you could be shorting here, but you have to be careful because we're in a bull market. But you can short down to some support level. That's what we did. And again, now you can see how choppy this is. Really choppy trading. So this kind of just shows you over time, the compass system is back to green again here. Right back at the 5th of June, we went long, and you notice that we had blue and green across the board. Market popped up, and up it went. So this is what you see on the daily chart. You get the same information on a 5-minute chart, but it makes it very clear and very easy to understand what the market is doing and in which direction you should be trading in. Okay, so that's our recent price action. I want to go over kind of quickly the basic high probability trade set, what I call a setup funnel. And this is what I teach and what everybody in the room uses to find a trade. How many of these check marks does that stock meet? In other words, how many of these criteria work for it? So what I do is I talk about five different things here. The daily and 5-minute chart need to align. When you're getting into a trade, the daily chart should be bullish if you're going long and bearish if you're going short. Don't be taking a trade short if the daily chart is bullish. That's important. So I always look for the daily and 5-minute chart to align. I want to trade with the trend, both the stock and market trend, if there is one. If there's not, then I can avoid this one or negate this one. But the compass indicators have to align. I cannot take a trade if I don't feel like the institutions are in there. The compass system has to be telling me that the institutions are in there buying or selling. If I'm going to go short, they need to be selling. If I'm going to go long, they need to go buying. I'm going to go long, they need to be buying. So this and this are critical. Then we want relative strength and relative weakness. Now, this can come and go during the day. And if you like a stock long, what you really want to do is wait for the time during the day when that stock now has relative weakness to the SPY or relative strength if you're going long. So that's another checkbox. So you want this one, 5-minute and daily chart lined up. You want the compass indicators to tell you the institutions are in there. You want relative strength and relative weakness, and then you want to enter near support or resistance. If the stock meets these criteria and drops out the bottom, you've got a really high probability trade that you can then take a look at some more additional indicators to find out some more technical analysis to see if it's the best. But this eliminates most of those trades that you'll be looking at during the day. All right, so again, this is just a recap of the funnel method. I put in green the most important ones. The stock to be traded should have a daily and 5-minute chart aligned. The compass indicators must align in the direction of the trade. And you do want to have relative strength or relative weakness. And a couple of small things here if you're trading intraday, the stock price should be above the VWAP. If you don't know what the VWAP is, I'll show you for long and below the VWAP for short. And the key thing I try to teach in the room every day is to have patience. Wait for these stocks to come to you and pick only the best. That's what you don't need to be trading 10 trades a day. If you can have 2 or 3 good trades a day, you're in good shape if you're taking the very best. Okay. So inside the room and on the alert service that I have, this is typically what we're going to be taking. A lot of straight calls and puts. If you like straight calls and puts, we do a lot of straight calls and puts. Typically, they're going to be anywhere from 3 weeks out to 2 months out at max, and we don't usually keep them that long. Now, they also could be intraday trades, but I still go out in time on the calls and puts to protect against too much time decay. We also do debit spreads using weekly options expiration. This is kind of an unusual one. Most people use debit spreads, but they don't use weekly expirations on the current week. I always use the current week. I had one today on Amazon, I think, and had a nice trade in that for about a 30% gain. Time spreads, which is the one I'm going to go over here today. This time spreads we use over earnings. It's also called the calendar spread, and this is a non-directional trade that we're capturing what's called a volatility crush, which I'll explain when earnings come out on a stock. And then I have another one called the weekly ATM strategy, which is where we sell puts every week against a longer dated long put out 2 months in time or so. So we can keep selling puts against that stock every single week and bring in a lot of premium. I've got one on Google right now. We're getting ready to take final profits on it. It's been extremely profitable. And then I do credit spreads also to capture premium over a few weeks. You may be familiar with credit spreads, but the strategies that you use, it's really important to structure them to the market. If you've got a bullish market, certain strategies work. A bearish market, certain strategies work. And if you've got a neutral or choppy market, there's other strategies that work. You've got to use the proper strategy for the proper market setup. And again, we do credit spreads. And then I also have a intraday type trade called the SPY Super System. This is when we trade the SPY or the Q, either long or short. When we have the institutions in buying it or selling it, it's coming off a support or resistance level. The market internals are also bullish or bearish to correspond with the compass system. Then I can take a trade, but most of these only last for 3, 4, or 5 candles or so. So that's what we get in the room. This is what we send out on alerts. You won't get the SPY Super System on alerts because it's too quick. All right, so those are the strategies we use. All right, let me see if I got any questions. Get down here. Bottom of the slides are cut off. I hope not so. All right, so the alert service, I want to just go over what the alert service is designed for. It's designed obviously for day trades and short-term swing trades. It's not an investment service. It's day trades and short-term swings. It's designed for traders who can't watch the market all day or don't want to watch the market all day. They just want to make some trades. These will be real-time alerts on the highest probability trade setups. And again, we find the highest probability trade setups by identifying institutional involvement, market internals, and by doing technical analysis. And that's the process I go through to find the trades to take. This is just I need to update this. This is from last fall. Just a typical, this is a 90-day cumulative P&L showing $2,000 invested in each trade. So what I'm going to do here is I'm going to run through some of the results for some of the trades we've taken in the last 10 months or so. I'm not going to go over every one. The key thing here I want to show is I want to highlight what you can expect for returns on the trades that we take. I don't want people to think that I'm one of these services where they'll send you an email and say you're going to get 500%, you're going to get 1,000%. That's nonsense. You can't do it consistently. So this is typically what we see, and this is in September of 2023. Again, we had 25 wins and 2 losses for 92% win rate, pretty high win rate. I just use a base. If you invested 2,000 in each trade, it created a profit of 77.88. This is just an arbitrary number, just so I have something to compare it against month to month. But again, you can see the trades 23% up, 43% up, only 5% up, 108% here on STX, 31% in Oracle. But you can see what the percentages are. We had a couple of losses. We do have losses. Most, if people tell you they don't have losses, they're lying to you. Here's October, and again, I don't want to dwell on it too much. I just want you to see the percentage gains, how it stays in the same ballpark all the time. 29, 23, 33, 43, 28, 17. This is what you'll see. And again, you get a few losses. And here's a couple of time spreads that we're going to go over here in a little bit. But in October, we had 24 wins and 4 losses, 86% win rate, 2,000 invested in each trade, produced 44.80 in profits. And a lot of the profitability, by the way, is dependent upon the market itself. If the market is trending, you can stay in trades longer, you can take bigger profits. November trades here, again, we had 21 wins, 4 losses, 84% win rate. So we had a lower win rate, but we actually netted more money, and that was because we were able to stay in some of the trades longer. But again, you can see here the percentage wins that we've got, what we're getting out of these trades. We only had 8 in Goldman Sachs here, but we do some put credit spreads. But you can see it's 20, 30, 40% fairly frequently on these trades. December, very short month for us. I didn't trade a lot in December with all the holidays and stuff, but still had an 87.5% win rate. And I'll just sail through these. Is January, again, nice wins here, 20 wins, 2 losses, 90% win rate, 75.05. Had some nice wins. We had Mara for 65. This was a crypto stock. Workday for 26%. Boeing we had for 96%. So pretty nice wins here in January. February was a really, really good month. 92% win rate, 24 wins, 2 losses. I broke out the alerted service starting in February, so if I could show folks who are on the alert service, because you don't get as many alerts as call-outs as you get in the room. But the alert service was 20 and 2, 6,900 up, and 24 and 2, 92% win rate, 11,745. A really good month in February. All right, so I just want to recap the results here, and then we'll be done with talking about the results. I do want you to understand that we have a really high win rate, and we make good money, and I want to go over how we do that. If you had in 2023, if you invested 2,000 in each trade, taken in the Compass options room, it produced a profit of $60,208. So if you started with a $50,000 account, this is completely arbitrary. You would have a 4%. You would have used 4% of your account balance when you first made your trades, and the account grew by 120%. And at the end of the year, it would have been at 110,000. So your trades at the end of the year, if you're still putting 2,000 into trade, that was you would have been using 2% of your final account balance. So that was 2023. This was the first quarter of 2024. Again, you can see the consistency here: 86% win rate in the trading room, 87% win rate in the alert service. The first quarter, the trading room was up 18,000, a little over 18,000. The room was up 12,000. This corresponds to about 70,000 a year, which is close to the 60,000 we did last year. This is the second quarter. I just put these numbers together. We haven't really, I've still got a couple of trades off in June that haven't come off yet, but we had 65 wins and 14 losses, 83% win rate, 14,842. Alert service, 35 wins, 6 losses, 85% win rate, 11,784. All right, so this is just the first and second quarter of this year, very comparable to last year. It doesn't change a lot from year to year. The win rate stays very, very consistent over time. Now in May trades, I'm going to show the May and June, and the reason I wanted to do this is I wanted to highlight what we're going to be talking about here in a minute, which is time spreads. So these were the May trades that we took, and you notice we had 1, 2, 3, 4, 5, 6, 7, 8 time spreads, and we had 7 wins out of those 8 time spreads, and some pretty nice wins here: 71%, 50% here, 40% here, 38% and 60%. So we had some nice wins. These were trades on earnings. So we don't do as many months we don't have a lot of earnings, obviously. You're going to do a lot more time spreads in July and August than you are in September because it tends to tail off. But in May, alerted trades, 15 wins and 1 loss. 2,000 invested and netted 82.29. And in May, in the options room, we had 27 wins, 6 losses, quite a few more trades. 2,000 invested, netted 89.86, which you can see we didn't make too much more money in the room, and we had 33 trades versus 16 trades. So the alert service was really, really very, very effective in May. In his June so far, up until a few days ago, we've had just 1 time spread. I did take a time spread on Nike overnight today, looking at Nike, and Nike needs to trade, for me to make profits in it, it needs to trade between about $88 and $102 at the close when it opens tomorrow. All right, so these are the June trades, and again, percentages very consistent here. 17, 23, 9, 15, 21, 40 in the sub weekly ATM, 27, 33. June trades taken so far, 20 wins and 3 losses, 88% win rate. 2,000 invested, netted 57.46 so far. And on the alert trades, 12 and 1, 92% win rate, 66.64 actually netted more money than the actual room. But so this is June. So that's May and June, and there's your time spreads. Now for the alert service, how long are those $2,000 trades? Typically, they're going to be either the shortest ones, obviously intraday. Some days I'll get in the morning and get out in the afternoon, but they'll typically be over in a few days. Sometimes we'll take them for a week or 2. Just depends on the price action in the market, but typically not longer than a couple of weeks. All right, so when you get a text for the alerts that you're going to get, you're going to have the stock symbol. You're going to have the option strike price, obviously, the expiration date on the option, and the price to pay for the option, which may say, you know, $1 to $1.05 or 95 cents to $1, but it'll tell you what to pay for that option. And I would recommend sticking to that. If the stock moves up really fast, you don't really want to chase it. Wait for it to come back down. Keep the original order in there at the original price and see if you can get filled. Typically, I send out an alert to buy the stock, buy the option, and then I'll send a separate alert out to get out of the trade. That would be coming out later that day, or it might be even a few days later. I'm just looking at the price action and trying to get what I think is the best profits we can get out of the particular trade. So when you get an exit price, an alert for an exit price, I recommend you put it in as GTC or good till canceled. So if you're not in front of your computer in the morning or anytime during the day, and you've got that order working out there for the profit target, then if you're not there, you'll still get filled, and you can take that. You'll take the profits. All right. So again, how do we achieve the kind of results that we just had? You just saw what the results were. They're pretty dramatic. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. This is key. We're only taking trades that they qualify at this level. Again, so we only take trades when both of these are in our favor. It's not exactly true. I'll take trades when the internals are neutral, but the institutions are in the trade. I don't have to have bullish or bearish market internals. As long as they're neutral, I'll take a trade as long as the institution's in there. But if they're both in our favor, that gives us even a bigger edge. And again, we're going to align the trades with the institutions in the market. And this is just kind of a blurb on how we do this, the institutional money flow, how important this is to being a successful trader. Being able to identify this is critical. And I've been doing this for a good long time. And that's how we're able to do this. So again, I'm looking at institutional money flow among some other technicals that I look at. So how do we identify the institutions are in? It's just people asking me this a lot. And we do what's called a triple screen assessment. You can call this fractal, or you can call it multi-time frame. We look at 3 things. We look at the momentum over the current time frame and multiple time frames. We look at the trend over current time frames and multiple time frames. And we look at the money flow, or the money flow derivative we've got. And if the momentum is moving up, for example, it's bullish on multiple time frames and current time frames. The trend is moving up on multiple time frames and current time frames. the money flow is moving up on multiple time frames and current time frames, the likelihood of that stock being pushed by institutions is extremely high here, extremely high, well up into the 90s, 96, 97, 98%. That is an institution is moving this stock, because retail traders cannot do this. There's no way they can move these like this over multiple time frames. So that's what we're looking for, and that's what the Compass system identifies for us. All right. Before I go on into some of the specific charts, I want to take time here because I know some folks are interested in learning about how to trade over earnings, what I call time spreads. It's a calendar spread, but this is the only kind of trade I trade over earnings. So let's go over how these work, so you can have this as a strategy to use the next time earnings comes out. Now you get earnings most every day, but you've got to have specific criteria, which I'll show you. So I call them time spreads, right? So this is our all time spreads trade from the beginning of the year. And again, we have about an 85% win rate. I've been doing this for a little over 2 years since I discovered this strategy and tested it and put it into effect. So these are the wins we've had. You had 100% on HPQ. I have losers, of course, but here is all the time spreads right up through recent. Again, you can see they didn't have many in June because there wasn't many earnings. 32 wins and 5 losses, 86% win rate in time spreads. That's really good, and the time set percentages. We talked about the winning percentage and the other trades that we had, the normal puts and calls, etc. The time spreads typically do better. They produce higher percentages. You can see 84% in Ford, 52 in Akamai, HPQ 50%, 45% in AMAT, Sedge 45%. So the percentages typically will be higher with time spreads than they are with standard type puts and calls. All right, so let's talk about time spreads. This is a strategy that I'm going to share with you. Again, I share it in the room. It's not something I share everywhere. It's the only strategy I use over earnings. It's a time spread on stocks reporting earnings. They have to be reporting either tonight or tomorrow morning. When you put the trade on, like I put a trade on Nike today, they report it after earnings tonight. If they report it after earnings tonight or tomorrow morning, I can take the time spread, but it's got to be just prior to earnings coming out. All right. It's meant to capture the difference of the implied volatility crush and the time decay between this week's and next week's options. This is how this makes money. All right, and we'll talk about what that IV crush is, but this is how it's making money. It's capturing differences between this week's implied volatility and next week's implied volatility, and also the acceleration in time decay this week versus next week's time decay. Again, it works best on stocks that historically don't exceed their expected move after earnings release, so harvesting the premiums from the options can be profitable. What this means is, if the market makers have expected a stock to move 15% on earnings, you want it to move less than 15%. It doesn't make any difference if it moves 10% up or 10% down. As long as it trades inside of that expected move, then we're going to be able to make money, because the market makers have the options priced at what they think the expected move will be. And there are a lot of stocks that historically very rarely even beat not the earnings expectation, but the actual move that the stock makes. Remember, we're not talking about what the earnings are. We're talking about what the price movement is on the stock. So that it works best on stocks that historically don't exceed the expected move after the earnings release. You enter the time spreads for a debit, and that's the total risk on the trade. In other words, when you take a debit on a time spread, which I'll show you how it's structured, that's the most you can lose on that. We took a time spread tonight on Nike. We paid $35 a contract. That's our maximum loss, is $35 a contract. Can't lose any more. Again, time spreads, again, are initiated on stocks reporting earnings tonight or tomorrow morning before the open, and consists of, this is what the strategy is: sell this week's expiration at the money calls. I use calls, you can use puts, but I sell this week's expiration at the money calls and buy next week's calls using the same strike. This is going to be for a debit. So if I used a Nike, I used like a Nike 94 today. I sold this week's $94 calls and bought next week's $94 calls. Okay, I'm selling this week's calls. Understand that. This is how you make money in the time spread by selling this week's calls, because you're trying to capture the volatility crush that's coming in the morning. And you do that by selling this week's volatility and buying next week's volatility. So after the earnings are released, the implied volatility is going to be drained or be crushed from both this week's and next week's options. However, the implied volatility is higher for the current week's options versus next week's, giving us the profit, because obviously the earnings are much closer to Nike's implied volatility for tonight is going to be a lot higher than it is for next Friday. And we're trying to capture the difference between that. That's how this works. And the reason that works is because of this crush. So let me talk about that in a second. And again, this will allow us to buy back this week's option and sell next week's option for a profit of about 15 to 50%. This is normally a 15 to 50%, usually 30 to 50%. And you do it as one trade. So you enter the trade by selling this week's call and buying next week's call. You exit the trade by buying this week's call and selling next week's call. A pretty simple calendar spread, basically. All right, so what is the volatility crush? Let's understand how we're capturing this money. What is creating this profit for us? The volatility crush, it's the additional premium included in the options prior to earnings due to the uncertainty of the stock price's reaction to the earnings report. The market makers are going to jack up the premiums on the puts and the calls because they don't know two things. They don't know which way the stock's going to go, and they don't know how far it's going to go. So they have to increase the volatility on the options, and they do that by raising the option strike prices. So we're selling a higher strike price not a higher strike price. We're selling a higher volatility this week than is in next week's. So that's what the implied volatility crushes. That's how we're making money, and this is what the market makers do. Immediately after earnings are released, the additional volatility that was included in the option premium drops or is crushed. Okay, the earnings comes out. Now the market makers know which way the stock's going to go and about how far it's going to go. So they immediately start pulling a premium out of those options. They drop in price. And remember, we sold this week's. So if they drop in price, we can buy it back cheaper. And that is the whole key. As long as the stock hasn't exceeded what the expected move was, we can buy back this week's calls that we sold for a lot cheaper than we sold them for, giving us a profit as far as implied volatility is concerned. And if you select the stocks that have a specific criteria just prior to earnings, the volatility crush can be captured in nice profits. And I'll go over the criteria. That's very important. This doesn't just work generally on any stock. You have to have specific criteria that you need to do this. But hopefully you understand this volatility crush, because this is what makes this trade so effective. And it also is really nice because you don't really care which way the stock goes. It's what's called a non-directional trade. But basically, when Nike reports, I don't care if it goes up 8 points or down 8 points. As long as it doesn't go up by 12 or 14 points, I'm in good shape tomorrow morning. So all the trades will be calendar spreads. Also, I call them time spreads, and because it's a specific calendar spread, we're only using this week's and next week's expiration. Now, the time spread is structured to capture the implied volatility drop after the earnings released and the difference between this week's volatility and next week's option volatility. That's what we're capturing. We're capturing the difference between those two volatilities. It also, by the way, captures the difference between this week's options time decay and next week's options time decay. If you think about options, the time decay on an option that expires tomorrow is a heck of a lot faster than the one that expires next Friday. So we're also capturing that implied volatility crush, and we're capturing the time decay difference between this week and next week. Those two things give us the ability to make a profit on these trades. And again, you enter the trade just prior to earnings release, enter the trade in the afternoon before the earnings release occurs, after the close, or before the opening next morning. We've covered this quite a bit. And then we try to take to it 20 to 40, sometimes 50% in the morning. And we try to have the order working when the market opens, because you want to capture that volatility as soon as that volatility crush takes place. So most of our trades, a lot of our trades, will be closed out like at 9:31. As soon as the market opens, we'll close and take profits. So we put Nike on at 3 o'clock. Market opens at 9 o'clock. At 9:30 in the morning, we could be out of the trade by 9:31 with a profit if the conditions are correct. All right. So there you go. And this is the time spread criteria. Must have weekly options, obviously. We're buying this week's and selling this week's and buying next week's. We have to have weekly options. The stock has earnings announced after today's market close. If we're buying to tomorrow's market open, the implied volatility difference between this week's options and next week's options has to be a large percentage of 40% or more. Again, I have to look at the implied volatility and determine what the difference is between this week's. If this week's implied volatility is 180 and next week's is 80, I get a 100 difference. That's a big volatility. It's more than a 50%. That's large. That's what we're looking for. And again, historically, the stock should move less than the expected move at least 80% of the time or more. In other words, I don't want this stock moving outside the expected range more than 20% of the time. Again, we enter the trade in the afternoon prior to tonight or tomorrow morning's earnings release, and we close the trade for profit after the market open if possible. Okay, so and there is some adjustments we can do if it doesn't work for us. I won't get into that tonight, but there is some adjustments in this. But all of these go out on the alert service when I'm doing time spreads. Time spreads go out on the alert service, and we do a lot of them. As we get into July, we'll be doing a lot. All right, so that's time spreads. I hope you found that interesting. If you're in my room or in the alert service, I have a video on all of the strategies I use, but specifically time spreads that we talked about. I have about a half-an-hour video on how those are structured and how you make money on them. So here's the compass system. I just want to go over some charts quickly so you can see the compass system. This is a Tesla setup that we took. This, as you can see, Tesla is all green here. Institutions are buying. This is a 5-minute chart. You can see the compass system. The compass system has a few things on it. It has these pink arrows, which are pop out of the box symbols that we call pop symbols. This tells us when a stock's breaking out of compression. We took this trade right here as it popped up and went across above the 15 EMA. This is a 15 EMA, this little green line. That's a main trend line. And you can see the stock just marched up and started to get out right here. So that's Tesla, and that's what the compass system looks like. This is Gilead. I was using these charts to show Fibonacci reversals. We use Fibonacci candles to find a reversal. You can see it right here. This is where we get in. Took the trade off of that pop right there. Again, see pop out of the box symbol. GE, nice trade here. Again, moving sideways, and then we get this is a Fibonacci reversal. I have a video on Fibonacci reversals. I'm not going to get into them in detail here, but just know that when you go from a stock with a wick and a tail to a flat bottom, that's a Fibonacci reversal candle, and it makes for a really good entry for a long. All right, so I'm going to show some of the charts of the trades we've done recently on the compass system, so you can kind of see how we find these. This is one we just took a couple days ago, SMR. SMR, we were in this trade for 2 days. This is a daily chart in SMR. Notice that it's in compression. This is, by the way, another thing the compass system produces, this dynamic compression zone, the shaded area. But see how it popped out of the dynamic compression zone right there? And this is where we took the trade long. Everything was green. We knew institutions were buying it. We took it right here, and we get out here and here. And we got out, paid $250 for the option. And after the second trade, we get out for that $250 went to $410, which is a pretty large profit, 64% profit in 2 days. Now this is the daily chart. Now here's where we get into the trade on the 5-minute chart. Here's the daily chart. Remember, I told you the daily chart needs to be bullish. Here's the 5-minute chart on SMR. This is where we were looking to get into this trade. Where do we want to get into it? Well, you can see this VWAP right here, the volume weighted average price on the 5-minute, the pink line. I want to get in it as it breaks through that, which it did right here on a pop out of the box symbol. The candles went to green and blue. Everything was bullish right here. So we get in right here. So this is where we took the trade entry that day. Now we didn't get out for 2 days, but this is where we get in because we wanted to enter on a good bullish daily setup, which is what we did with that. All right. This was workday. This was another nice one we had. You see the compass system telling us the stock is bullish. Went back to bearish. We had to be a little cautious here, though the current time frame was still giving us current time frame momentum was still staying bullish. So I didn't get out because this was still bullish, even though this was chopping around. And we got in here and we had this. We were on this for 5 days as workday, and it moved up beautifully. And everything, of course, this stayed blue or green the whole way. MDT, we took 25% profit on this swing trade right here. This is where we get in. Again, you see how it went from yellow to blue, current time frame, everything else was green. We knew the institutions were buying this. We were just looking for a decent level to get in for a break, which we did right here. The pink line, it does not matter on a daily chart. This is a daily chart. The VWAP doesn't matter. Popped right here off of this 15 EMA and marched right up. And again, we took a 25% profit on MDT. And again, you can see here, the compass system is telling us that the institutions are in here. Here's VKTX, 30% profit in 3 days. Everything green, institutions are buying. Popped up strongly here. We bought it here. We get out here. It didn't really move up that much, but we still made 30% on the options. This was a nice trade in McDonald's. Overnight trade. We're in for 8:30, out for 11:30 overnight. $3 a contract, 37% gain. Notice everything's green. We know the institutions are buying, but notice even though they were buying, we got a lot of compression. I'm not really want to get into the trade on a compression. I want it to break compression. Here's where it broke compression, right out of this dynamic compression zone. Pop out of the box symbol, get out here, held it overnight, get out here. And again, a 37% gain overnight on that particular trade at McDonald's. Moderna, a nice 33% gain. Again, see how red and yellow everything is. Institutions are selling this. You know, really, it's a simple thing to see when they're selling, when it's all colored the same like that. So we just took it here, took a 33% profit in Moderna. Amazon at 32% profit. This was just an intraday trade. We took it on this candle right here. As the stock compressed, everything went green except for the long-term momentum, long-term trend. But I was much more comfortable was very comfortable taking the trade with multiple time frame and current time frame green across the board here. So we took the trade right there, popped up 32%, just a day trade. JD, another day trade. We caught it on this breakdown of this dynamic compression zone. This went from green to yellow. Everything else was red. We knew the institutions were selling it. We went ahead and took the trade, and we get out before the end of the day for a 61% profit. That was a very nice profit on JD. Dollar Tree, 25%. Again, you can see institutions selling. Price action kind of going sideways. You wait for the break, which is where we took it right here. Break out of compression, 25% profit on Dollar Tree. And Datadog, same thing. So you can see this over and over again. The compass system is telling us that the institutions are in there. We're going to go ahead and trade it. I'm not touching it when I'm getting lots of different colors, but when I start to get red and green together, or blue and green together, I'm going to take it. CrowdStrike right here, nice profit here on this one, 20% profit. Again, this was chopping around. We went blue right here on this candle, so I took it and I had blue down here in the current time frame, so I was happy taking it. Didn't have a problem with this yellow. I had to watch it, but it was still okay. And then went back to blue again, but we were only in it for a short time. Amazon, 32%. This is a 5-minute chart, moving sideways, going green, yellow, green, yellow. Now we go green. Everything's green. Pop out of the box, coming off the 15. Buy the options right here. 32% profit in 45 minutes. Just move it right up. Beautiful trade. ENPH, another beautiful 20% in 1 hour, as this thing just dropped on a 5-minute chart. Again, notice we're below the VWAP. We've got compression. The institutions are selling. We get the pop out of the box symbol. We take it short, and down it goes. And Verizon, this was the one I like to show because this is kind of shows you what the power of a low price stock. Verizon has fairly low priced options. We went out into the next week's in the money options and we paid 45 cents for the in the money options for Verizon because it doesn't move a lot. But we get in at 45 cents and look at this nice drop below the VWAP with the pop out of the box symbol. We were in this for 1 hour and we get out for $67 a contract. So if you put 10 contracts on, $450 turned into $670 in 1 hour. Pretty nice. And this, I just wanted to show the SPY super system, what we look for. This is a case where I'm only trading on a 5-minute chart when the institutions are selling, which you can see they are right here. And I'm breaking compression. I'm getting a pop out of the box symbol and everything's lined up bearishly coming off the 15 EMA. That would be a support level or a resistance level. We bought it right here. And again, this was what you do. You just trade it to the downside to take puts. As soon as it starts to get some movement to the upside, you take your profits. You don't you overstay your welcome on these kind of trades. So that's the SPY super system. Netflix, this is another one, 20% profit again. 5-minute chart. Notice the VWAP. Notice the price floor dropping below the VWAP. Notice the institutions of selling. We went from blue to yellow. They're in here selling. We took this 20% profit right here in that probably about an hour. And Tesla, this was another nice 30% profit in this one. As the stock compresses along this 15 EMA, we bought it here as we got a pop out of the box symbol, wrote it down, and it fell pretty hard into the close for 30% profit. Notice everything here, yellow and red all the way across. You can see institutions are selling. It's not hard to see that they're selling it. And this was an overnight. We took Tesla overnight. Again, we had a pop out of the box symbol in the 5-minute chart at the end of the day. It was below the VWAP. Everything had just gone to red or yellow. And that told me that it was bearish, so we took a chance in taking an overnight, and we fortunately got a gap down on this one. I went from 120 to 112. Puts exploded, about $750 a contract in those particular options. All right. So, and this is just Tesla. I already showed this one just to kind of show you the compass system. So hopefully that gives a fairly clear view of the compass system. This is QSR. I just showed this to show why the daily chart and 5-minute chart is so important. This is QSR on a daily right here. All right, you see how it's coming up. Everything went to yellow to blue. Everything was blue and green. I know I want to trade this thing long, but where do I want to get in? So on a 5-minute chart, I'm watching this stock and it's coming right along this 15 EMA, getting some color changes, and then I finally go to blue here, and it pops up over this 15 EMA, and I ride it up for a good long time. All right, so this was a nice trade on QSR, but you can see with this 5-minute how this 5-minute candle is working. Again, guiding us into this trade, so we only getting in when the institutions are in the trade. Really, really important. I can't emphasize enough how important it is to trade with the institutions. We're not going to ever take any money from the institutions. We're taking from other retail traders who don't know what we know, and they don't have the indicators that we've got. All right, so again, here's just a recap. This is what we do in the room. We do straight calls and puts. We'll do debit spreads using weekly options, time spreads, which we talked quite a bit about here tonight. I hope you found that interesting and helpful. It's a really, really good strategy. And then we'll use weekly ATMs and then credit spreads in the SPY super system. But this is most of our trades are going to fall in here. Straight puts and calls and time spreads during earnings season. Those are the majority of the trades. All right, and there's the alert service again to show you what it looks like. And I'm going to show you what the offers are that we've got. Got some nice ones here. They've done a really nice job on this. This is the alert service for a year, $7.98. For a quarter, $2.96. That comes with 1 month in my live trading room. So you can come and go as you want in and out of the trading room. We also have a Discord chat room with the two other additional professional traders in there where they answer questions. They have an audio feed that you can talk on and listen. Obviously, you get the alerts with it. And then I have about 30 videos right now on training videos for the compass indicators and how to use them. It's really not that complicated. It's really pretty simple, but those videos will explain this in more detail. Right, so that's the alert service. Now, if you want to go in the trading room, this is interesting, right? This is $7.98. For $11.98, you get the trading room, and that includes the alert service. So you get the alert service and the trading room. So if you're not in the room, you're still going to get the alerts. You can come and go into the room if you want to. That's $11.98 for the room. For $148, if you want to try it for a month, not something I really recommend because I don't think it gives you enough exposure to really make a judgment. But again, you're going to have a live trading room for a year if you take that. You get the Discord, you'll get the text, and you'll get the alerts, obviously, and you'll get all the videos. All right, so that's a pretty good deal. And then we have the Compass trading system. This is if you're interested in the software that goes on. It's on my Thinkorswim platform. You can get it on Thinkorswim, or you can get it on Ninja. But again, the Compass trading system, you go in, you get a month free in the room. You buy the software for a year. You get the Discord, you get the alerts, you get all the videos, and it'll be you get multiple scanners, and it'll be installed on your machine by Brightline. They'll take over your machines, install it, and it'll look like exactly like my cost platform. It looks exactly like the Compass system I've got. It also includes all the scanners that I've got. Right, so that's a pretty nice deal. Now, this is the one that is they added new here for the video here for the webinar today, and this is really a no-brainer. If you buy the live trading room 1 year in the trading room, you get the trading room, you get the alerts, you get all of the access to the Discord room as well as the videos. But if you buy it today, or by Sunday, you're also going to get the Compass system software for free. All right, they're going to give you the Compass system, which we just looked at back here for $12.49. They're going to throw that in for just $11.98. So you're going to get the Compass system for free for this particular particular deal. This is really a no-brainer. You buy one get one free. This is kind of unheard of to actually give the software out for a year when you buy the room for a year. But that way, if you've got the software to use, and if you're not in the room, you can look at all the stocks you're interested in on the Compass system on your own trading platform. So this is probably the best thing you'll ever see. This is really, really a great deal. Again, you get my entire workspace included free on the machine. The text at Brightline will put it on. Now it's important to understand, if you have the Compass system on like Thinkorswim like I do, I don't trade off of Thinkorswim. I just use that to give me the indicators that I need to pick the stocks that I want to use. But I don't trade on Thinkorswim. I actually trade off of Tradier using TradeHawk as a front end. But you can trade off of anything. And you can trade off of any particular platform you want. But you would use the Compass system off, in this particular case, on Thinkorswim to get your indicators and find out which stocks you want to trade. Then you just trade them off of the room that you're comfortable trading in. That's what I do. All right, so that's the best deal I think I've ever seen that Brightline does. They'll throw the actual Compass software in for free if you take a year's subscription to the room, and that will include a year's worth of alert services as well. All right, so that's about all I have to say. Let's see, any questions? Can the alert service be used with some other brokers like TradeStation or Interactive Brokers? Yeah, listen, you can use the alert services just identifying the stocks to trade. It's not going to. It doesn't say anything. It doesn't say anything about how to trade. Like I said, I don't trade on Thinkorswim. I'm just finding the stocks. If you find a stock to trade, you can trade it with whatever platform you're comfortable with. Let's see here. Got a few questions I didn't see there. All right, how long the trades? We talked about that. What percentage of my trades are at the money naked puts? Well, if you're talking about selling puts by themselves with without a spread, I don't do anything. I don't do naked puts in the room or naked calls. I would never do a naked call. And I don't do naked puts. You should only be doing naked puts. In other words, selling puts without a spread. You should only be doing that if you want to own the stock at the strike price that you're selling the puts at. How do I gauge the historic probability the actual move won't exceed the expected move? I've got a service that I use that a friend of mine has, where I look at it to come up with that. There's probably other programs out there that do that, but I have one that I use that a friend of mine has that he lets me use that tells me how often it beats. Like I know NVIDIA exceeds the range 27% of the time tonight, which is a little more than I'm comfortable with. I'd rather have it beat less than that, but the implied volatility difference was big enough to make the trade justifiable in my mind. Can the alert service be used with some other brokers? I just said, yeah, you can trade it with TradeStation, Interactive Brokers. You can trade it with anybody you want. Again, all we're doing is telling you the stocks to trade. Where you trade the stocks is up to you. You trade them on your own platform. I mean, I use the Compass system on Thinkorswim, but I'm not trading on Thinkorswim. I'm just using the Compass system on there to give me the indications and the indicators that I need to find the trades that I want to take. Is a Compass trading system for life for a year? It's a year. It comes annually. It's an annual license on it. Okay, I think that's all the questions. Thanks very much. There was a lot of questions. I appreciate that. I hope you understand. Again, you don't have to trade on Thinkorswim just because you got the Compass system on there. You'll get the alerts, or you can look at the compass system. It'll come up with a trade that you want to take, that you like, that's high probability. Trade it wherever you want. You know, you can trade it on Tastyworks, you can trade it on Fidelity, you can trade it on Scott, you can trade it on Interactive Brokers. I trade it on Tradier. You can trade it off of any platform that you want to trade it off of. Can the indicators be accessed on TradingView? No, I don't think TradingView lets you do that. Like I use TC2000 for a scanner as well, but the compass system only goes on TOS or on Ninja. It doesn't go on anything else. And like TC2000 is very hesitant to have anybody put anything specialized out there. And I don't know about TradingView. I've used TradingView before, but I prefer TC2000 for my technical analysis to do that. But it's not going to go on TradingView. All right, everybody. Well, listen, thanks so much. I appreciate everybody being here for the webinar. I appreciate you taking your time on this Thursday afternoon to listen. I hope the information I gave on time spreads you'll find useful and use that strategy. Again, if you come into the room or the alert service, I have a whole video on that. Or you'll basically get a copy of this video as well, this presentation, and you can go back over the information I produced here today or showed you today in there. So again, that's the best deal I've seen. It's the best deal I can tell you about. I don't know. It's really pretty amazing. $11.98 for the room, which I told you made $60,000 last year if you put 2,000 into a trade. Now, not everybody does that, obviously, but you can extrapolate that down. If you put 1,000 into a trade, it would have been 30,000. That's quite a return on $11.98. So anyway, everybody have a great evening. Thanks so much for being here. Very much appreciated. If you go into the chat box, by the way, Rory has the links in there, I think. Yep, Rory's got the links in there for all of the things that we talked about right here. And if you're interested, you can click on that. You can certainly give him a call. And I look forward to seeing some folks in the room and on the alert service pretty soon. So everybody have a great evening. Enjoy yourself. Friday coming up tomorrow, and holiday next week. So we'll be active every day. By the way, I trade in my room every day from market open to market close. I get in about 9:15, open the room, and then I stay till market close every single day. So it's can't be trading all day. I'm looking for things all day, but I'm on there answering questions, etc. all day long. Some of the folks in the room can ask me for a stock. We'll post it up there. We'll talk about it. Go over all the technicals on it, why it's good, why it's bad, etc. I get a lot of good trades from the PIP members in the room who are also looking on the compass system. So, all right, everybody, have a great afternoon, great evening, and I look forward to seeing some folks in the room.
Thank you, David. We really appreciate it. And yeah, there were a lot of things to learn today, so we appreciate that. You make it look so simple with the compass system, and then you surprise us by making it even less complicated by offering an alert system as well. So we appreciate it. Ladies and gentlemen, if you want to receive trade alerts on trades that have a 90% chance of being profitable, whether the market goes up, down, or sideways, then professional options trader David Wyse of Rateline Trading has a service you may want to give a try. We've placed David's special offer link in the chat box. David, thanks again, and congratulations on putting up some massive numbers there. And thanks again for joining us here at Traders Corner. Hope to see you again. All right, ladies and gentlemen, that concludes today's presentation on Traders Corner. I know sometimes people ask about our YouTube channel, so let me put that in the chat box as well for Traders Corner. I've been neglecting, have not put that in, so let me add that right now. So that is Traders Corner's YouTube right there. And let me see, let me give you the Traders Corner homepage as well. If you get a chance, take a look at the profiles of some of the presenters that we've had today and in the past and stuff like that, and just get a feel of, the quality of the type of people that we bring in. It's really, really, really great stuff. So thanks again for joining us today, and have a blessed evening. It was a long day. We appreciate you working through the IT issues that we had today. And I think it was worth it. I think it was worth working through those things. So thanks again. Have a blessed evening, and so long, traders. Yes, there are replays, Arthur. So you can check that out on the YouTube. So thank you and have a great day. We appreciate it. Have an amazing weekend and go get those profits.